owners.
I've got 30 seconds left on the clock. Charles, just to fit this in, do you think people are underestimating Kamala Harris? It's almost become a joke.
Absolutely.
Do you think she can win?
Absolutely. Oh, absolutely. Look, you know, Kamala Harris has three advantages. One, she'll be totally underestimated. In politics, having low expectations is one of the greatest advantages you could have. Secondly, she gets all the Biden-Harris money, which is not able to be transferred to any other candidate. So she gets the war chest. She'll be very well funded. Third, look at her approval rating with Democrats, 84%. She's much more popular than the president with young voters. She's very popular with black voters, and she'll help drive women, turnout by women. I think people will totally underestimate the vice president. I'd put my money on her.
Let's do this again soon. Charles, thank you, sir. Absolutely. Charles Myers there of Signum Global Advisors. There you go.
When you look at Predict It, she now has a 32% chance of winning the presidency versus a 68% chance of Donald Trump.
The change in the betting markets, it's been amazing, hasn't it?
She's basically a better chance right now than Joe Biden.
From New York City, this is Bloomberg.
Politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
45 minutes from now, we'll have some data for you. The ADP report is just around the corner. Then after that, 15 minutes later, jobless claims in America. So about 60 minutes from now, we'll get some claims data for you. The scores going into it. Futures doing absolutely nothing on the S&P 500. Likewise, on the NASDAQ. Talked a lot about the shortened trading day for those of you that missed some of the time. So the stock market closing at 1 p.m. today. The bond market closing at 2. Let's check out the bond market, switch up the board and get to treasuries, and we'll start with a 10-year at 442.96. Yields doing nothing there at the 2-year level. We're up a basis point or two to 476. And we had this conversation with Andrew Honhorst of Citi earlier, who talked about this asymmetric bias of maybe Fed officials towards incoming economic data, that if you get softer labour market data, it's more likely you're going to get a cut and quicker from this Federal Reserve.
The question now is, what's the bar for truly soft data? Some people pointing to the unemployment rate creeping up from that 4% level. Other people just saying you'd have to have a 155,000 print on jobs created, and that would be enough. That's why I think the rhetoric from the Fed is actually getting more interesting. For a while, it was kind of, and now it's actually getting more interesting because you could see there is a feeling of wanting to buy into the progress of disinflation that we've seen so far.
The other challenge in fixed income, and we've talked about this repeatedly, it's not just for bonds, it's for stocks too, it's the whole market. You're looking ahead to 2025, you're flying absolutely blind. I'll pick up on what RBC's Laurie Calvasina said in the last 24 hours, upgraded a price target for 24, basically said there's too much fog going into 25 to offer any guidance on a price target for 2025. That's where we're at right now. Now think about how things changed from Thursday night. All of a sudden, we're having a very realistic conversation about Kamala Harris being the nominee for the Democratic Party. And all of a sudden, you've got to think about a different set of policies, a different cabinet, not just the incumbent versus the known entity of Donald Trump and what that would mean for markets. All of a sudden, you're having a completely different conversation almost overnight.
So last night I was thinking about this, and I was saying, if you would have had this on your bingo card, people would have said, all right, you're one of those people that says they're going to call up Jamie Dimon and see if they can come, if he can come down and serve as president. And yet here we are, and we just heard from Charles Myers over the Democratic donor as well as a strategist saying Biden has 5 to 6 days. And then he has to basically make a decision. And that's essentially where we are. You're right. Talk about flying blind in the market. Even if you know who the candidates are, how do you assess what their policies are going to be and the ramifications for the economy?
With great difficulty. You've got to push that through stocks, through bonds, work out what it means for the US dollar. We know what the consensus is on the US dollar. Donald Trump wins. We've got this idea that it's going to be quite protectionist, more tariffs, maybe inflationary. Ultimately, that's going to keep the Fed from cutting interest rates, perhaps in the short term at least, and that's going to feed this stronger dollar story. The euro right now is at 107.58. The other side of the trade, we've talked about that lots. We have an election like right now. Second round of the vote is going to be over the weekend in France.
And that comes after the UK election that's coming tomorrow, at a time where there's really a question of how far can populist governments push things in Europe. If, let's say, Marine Le Pen does get some sort of majority, which it's looking like she may not because of a whole host of different technical aspects, how far could she push it before the market pushes back? And we keep talking about that. I just wonder if we could just take a step back and say it is all about the economics, stupid, right? I mean, that's essentially what people say for the politics of the moment, and all of a sudden we're saying it's the politics, not the economics. At what point is Matt Miskin right when he says, ultimately, you just have to look at what the trends are. They are disinflationary. They are going to be slower growth, and that is the dynamic you're going to really have to factor out.
It's going to be a really long 4 months.
I know.
Let's put it that way. The euro, 107.59. Under surveillance this morning. The latest on Donald Trump's fundraising is all surpassing President Biden's. The former president raising more than $330 million in the second quarter, dealing another blow to Biden as his campaign faces ongoing criticism over his debate performance. Lisa, you mentioned what Charles Myers said just moments ago. He said we've got 5 or 6 days. He thought maybe we'd have 3 weeks. But we've said it repeatedly, the dam's been breaking in the last 24 hours in quite a material way.
Yeah, and to that point, he thought that he had 3 weeks, and he was telling that to some of his clients 1 day before changing his tune to saying maybe they only have 5 to 6 days. The other thing that he said that I thought was really interesting was that he's expecting about 40 Democratic Congress members to come out and reiterate what we heard from that Texas progressive, basically saying maybe Joe Biden should step aside for someone to take his place. Real question will be for the Democratic Party, if he chooses to do so, whether there is this groundswell of support around one candidate and whether that one candidate will be Kamala Harris. And then we can start to extrapolate out all the other questions, but really talk about the next 4 months and how quickly some of the narratives can shift when you potentially have a different cast of characters at the head.
This late in the game, it's all about the money. and we've heard it repeatedly, there's only one individual on the ticket that can have access to that money. Everyone else, you know, how quickly can you put a campaign together, raise the money, get the financing in place, go through all the mechanics involved? This is what Isaac Boltanski at BTIG was saying about an hour ago. This is not straightforward. It's not like you just sit here and say, yeah, Gavin Newsom, let's go. It's not that straightforward.
Yeah, I wonder how much it's a money thing, because they could potentially give the money back to the donors, and the donors could potentially then give it to another candidate if you coalesced around it. And I wonder how much is this political, because ultimately of the optics of Kamala Harris not getting the nomination when she is technically a number 2, she is a black female, and it would be particularly difficult for the Democratic Party to push her aside, shunt her, and still maintain a lot of support from a groundswell of people.
That's the latest on that front. We've talked a lot about the politics, we've talked a lot about the individuals. We need to talk about some of the policies that will address things like this. Owning a house in the US is less affordable now than at any time in the last 17 years. Higher expenses and mortgage rates hovering around 7% have outpaced incomes as a shortage of listings pushed the median home price to a record high, $360,000 US. This according to a new report. The pursuit of the American dream is traditionally something we'd be talking about repeatedly going into a November in an election year. This needs to be part of the conversation again.
I actually think this absolutely is part of the political scene, especially for younger people who don't have access to home buying in any kind of way, and you see rent prices going up in a significant way. How do you address this when you're dealing with a lot of NIMBY, not in my backyard, in terms of development? How do you address this when you have mortgage rates where they are and prices that haven't gone down? We've seen this from Joe Biden. It's really going to be a key question of how it changes the electorate in terms of what people are looking for and what galvanizes them.
Just a final story for you. This from Defense Secretary Lloyd Austin saying the United States will provide $2.3 billion in new military aid to Ukraine. Austin met with Ukraine's defense minister at the Pentagon just yesterday ahead of the NATO summit in Washington next week. Of course, as I repeated a little bit earlier this morning, Anne-Marie sat down with the Ukraine President Volodymyr Zelensky a little bit earlier, and she's going to be joining us a little bit later. Just one headline from that particular story. Lisa, Zelensky challenging the former President Donald Trump to reveal his plans to end this war and end this war quickly. And I can share the quote with you. If Trump knows how to finish this war, he should tell us today. He told Anne-Marie, if there are risks to Ukrainian independence, if we lose statehood, we want to be ready for this. We want to know.
And that's going to be a real question, considering the fact that Donald Trump has said that he could end this in one phone call. Really key to this is some of the discussion that we see between Russia and China, which is currently ongoing because the Russian and Chinese leaders are set to meet each other in a meeting out east.
Just working on getting that conversation going with Anne-Marie. She's going to be joining us in the next couple of minutes or so. Elsewhere, traders loading up on short-term treasuries after former President Donald Trump came out ahead of President Biden in last week's debate. Tom Titsouris of Strategas saying this: there's a narrative going around that the pop higher in yields is because of Trump's raising odds of taking the White House. We find this to be a convenient boogeyman for what is otherwise a combination of long-term structural forces and short-term liquidity drivers that are all pushing up yields. Tom joined us now for more. Tom, can we go through the list of things? Take away Thursday night. What else is on that list?
Yeah, well, in the immediate term, the list of things pushing Treasury yields up is that, simply put, there's been a drop in liquidity in the system as households and corporations have paid taxes heading into the end of the second quarter. We estimate that there was about a $400 billion drop in liquidity, much of it coming out of bank reserves. And when you see $400 billion come out of bank reserves, you're likely to see interest rates rise very short term. Now, we're past that now, but the market also has to focus on the fact that the deficit continues to be gargantuan. The deficit missed the estimate. We're still printing $2 trillion plus deficits. And into 2025, that's likely to come down, but not enough so that the market can just kind of breathe a sigh of relief here. So we're going to have to see coupon auctions rise as the deficit continues to print to the upside. And that's going to be a long-term problem for the bond market. And the bond vigilantes are sniffing that out today. They're not waiting until they find out who's in the White House.
Well, let's talk about who might be in the White House, Tom. How relevant is that conversation? You say it's convenient boogeyman right now. Just beyond that, what have you been telling clients about the last couple of days?
Well, I'm not sure whoever's in the White House is going to have much of an impact on the deficit in calendar year 2025. It's really 2026 and beyond. And that's going to really also come down to who controls the Senate. If you have full Republican control, then yes, it's very likely that you're going to have a little bit more pressure on the deficit, upside on the deficit, because of the pressure to cut taxes. If you have a divided government, what we find historically over the last, we'll call it 50 years, divided government is a little bit more fiscally conservative. So Senate control matters just as much as the White House. But my base case would be that we're going to see some extension of the Trump tax cuts no matter who's in the White House. And we're going to see this deficit continue to print at least above $1 trillion for calendar 2025 and 2026. So big picture is I think that we're going to see upward pressure on yields because of the deficit for years to come, irrespective of who's in the White House.
Given that, Tom, do you still see 10-year yields ending just north of 4% by year end?
We do, and the reason for that is because in the intermediate term, we'll say 6 to 9 months, we are in a disinflationary environment, and the Fed funds rate is still, by last check, 5.5%. So we're still tight policy, particularly for most U.S. households. Policy is tight in an environment where the labor market is slowing and inflation is slowing. So I would absolutely expect that, for example, Friday's jobs report, the jobs report's always the gold standard in economic data. That should show a further slowdown in the economy. And that should further add to the narrative that inflation is going to continue to slow as the summer progresses and into the fall. So that's how we justify 10-year yields dropping down to 4%. But the question is going to be how much lower than 4% can they go, one, without a recession, and if there is a recession, then how much lower do they go? Without a recession, I don't see yields dropping much more than down to 4%, maybe a little bit lower than that.
Maybe we can talk through the end of this year, but in 2025, how much visibility do you have to actually make a forecast at all, let alone, have any conviction?
Not a lot of visibility, to be perfectly honest with you. The big drivers, again, that we see that we are absolutely confident in is that coupon supply in the Treasury space is going to rise and that the deficit is going to be at least $1 trillion plus next year. That's what we have most confidence in. Next level confidence is that we're going to continue to see some sort of disinflationary progress into early next year, and the Fed is likely to cut into that. That is pretty much where our clarity ends, because tariff policy, tax policy, everything you can think of, regulatory policy is all up in the air at this point in time, and so is a complete question mark.
Hey, Tom, great to get your thoughts. Tom Titsouris there of Strategas on the latest in Washington and what it means for this bond market. Let's get you an update on stories elsewhere with your Bloomberg brief. Is Danny Berger. Hey, Danny.
Hey, John. A check on Paramount shares this morning, up nearly 12% in the pre-market trade. David Ellison, Skydance Media, is said to have reached yet another agreement over Paramount, rekindling deal talks that fell apart last month with a reportedly higher valuation. Skydance has a preliminary agreement to buy Sherry Redstone's National Amusements and merge with Paramount Global. Sources say that it could be announced within days, though the deal could still fall apart. Now, oil is trading near a 2-month high this morning on signs of a significant down draw in U.S. crude stockpiles. The American Petroleum Institute reported that crude inventory shrank over 9 million barrels last week. If confirmed, that would be the largest drop since January. Crude has remained solidly higher this year with a whole lot of risks, including hurricane season with Hurricane Beryl approaching Jamaica, global elections, and geopolitical escalations in the Middle East. Travel agencies are warning of a surge in travel this holiday weekend. The TSA expects more than 32 million people to fly over the July 4th holiday, while AAA is expecting more than 60 million people driving. And that is your Bloomberg Brief. John.
Danny, thank you. Up next on this program, do not miss this. Anne-Marie joining us after she sat down with Ukraine's President Zelensky. AMH live from Ukraine. Up next.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Was going to keep Great World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and
Equity futures right now on the S&P 500 totally unchanged. Let's just park the markets just for a moment and catch up with our colleague, good friend, co-host, Anne-Marie, who sat down with the Ukrainian President Volodymyr Zelensky a little bit earlier in Kyiv. AMH, fantastic work. Good morning to you.
Good morning, John. My big 3 takeaways from this interview is one, that President Volodymyr Zelensky, having watched the debate, heard what former President Donald Trump said, is potentially ready to sit down with him. He said it'll be tragic for Ukraine if they don't know what comes if former President Trump was to win in November. We also talked about the state of the war. He doesn't like the word stalemate or deadlock. He says the problem is Russia can track if they were to have a counterintensive, because the weapons have been so delayed coming from the United States, even though he was very grateful to the U.S. Congress for recently signing off on the $60 billion. And then finally, John, one thing that I really took away from this conversation, if the war to end, I asked him about a third-party mediator. Who can actually mediate the end of this war? You'd think it would be someone that has credibility in both Russia and Ukraine's eyes. He actually said it needs to be the United States and China. Let's take a listen to the state of the war at play right now from the president of Ukraine, Volodymyr Zelensky.
Домовлялись сторони про ceasefire. We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries, leaders who are trusted. They might have different ideas, different views on the stages how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they had almost reached the capital city. And they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart. And it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire
But we're going to see more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict. And it would be frozen for the aggressor. It would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? What would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well, because the answer of how this might all unravel will depend on also who's at the table from the United States.
Amongst other things, it might depend on who is the president of the U.S. Yes, that's a fact. Because the U.S., the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that or they want to focus more on their internal politics. I cannot say. It doesn't depend on me.
So did you watch the debate?
Yes, I watched the debate. So first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the U.S. media, but I watched. And we are not electing the president of the U.S., so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard.
What do you make of that?
Let me be frank. For example, well, the decision is on U.S. public. But let me just have some reasoning. Але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it will be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Looks like President Zelensky is ready to sit down with former President Trump, given his comments, Jonathan and Lisa, at the debate. When it came to President Biden, he was very careful with his words about his deteriorating health. He didn't really want to weigh in. But I will tell you this, when I asked him, Zelensky, who's 46, if he would still do his job at 81, his face said it all. He gasped, he laughed, he said a lot of individual things matter about that. Who's on your team? What's your health? And of course, he wanted to make sure everyone was aware that Ukraine is also a country at war.
Anne-Marie, just a brilliant exchange. AMH, just congratulations from all of us here at Bloomberg for your work and to the team on the ground in Kyiv today. We'll catch up with Anne-Marie in about an hour, again, to go through some of this. Lisa, just a decent idea, just from Anne-Marie at the end there, of how the rest of the world were responding to what this country saw take place on Thursday night.
We heard about it in terms of private conversations with different leaders basically saying they are worried. And this raises the question of the real on-the-ground consequences of Thursday night's debate if it is not sort of rectified in terms of perception for the sitting president for the next 4 months, let alone 4.5 years.
So let's get you set up for the next 1 hour. I can't do the next 4.5 years. The next 60 minutes or so. Here's the lineup for you. Sonal Desire, Franklin Templeton, Geetha Raghunathan of Bloomberg Intelligence. We'll speak to Thomas Simons of Jefferies and Mark McCormick of TD Securities. We'll catch up with AMH before we close out the program as well. Lisa, the data starts. ADP in about 20 minutes. Then it's on to jobless claims at 8:30. ISM services a little bit later. Fed minutes. There's a lot to talk about later on today.
Especially at a time where you've heard from guest after guest about a tipping point, a potential tipping point in the labor market. When do we start to see that? We didn't see that in JOLTS yesterday. Do we see it today? Do we see it on Friday? That's what people are watching for.
That conversation in the third hour of Bloomberg Surveillance from New York City this morning. Good morning.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
The Fed is certainly cognizant of the fact that it is nearing the end of this rate hike cycle.
The Fed has been effective in reintroducing balance to the labor market. But my concern is whether or not the pendulum swings too far.
The labor market has normalized rather than weakened sharply.
Initial jobless claims still at around 200,000 is fine. When it gets to about 300,000, that's when the Fed is going to have to pivot hard and start to cut.
The labor market has weakened. That window is closing to get ahead of that risk.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Got some good news for those of you absolutely sick and tired of the political conversations. Next 45 minutes, largely, I say largely political free because the focus is going to be on the economic data. In about 15 minutes time, the ADP employment report drops, the appetizer for the main event, the main course on Friday, payrolls, the estimate in our survey, 165, the previous number 152. We'll bring you the actual number in just a moment. Then at 8:30 Eastern time, Lisa, jobless claims, 235 the estimate, 233 the previous number.
You pointing out earlier that Andrew Hollenhorst of Citigroup saying that the pain threshold was around 260,000. If we get that number of initial jobless claims, that is sounding warning signals creeping higher. How do you interpret that? And that is how I'm curious in terms of the market reaction. Is there a bigger response to a small upside surprise in initial jobless claims given the asymmetry right now of the Fed response?
Two quotes, compare and contrast. First quote from Chairman Powell. Listen to this. Because the US economy is strong and the labor market is strong, we have the ability to take our time and get this right. Federal Reserve Chairman yesterday. Also yesterday, former Fed economist Claudia Sahm. Take a listen to this one. A good labor market is not a reason to wait. Remember when she said this? The reason to cut is that inflation is down considerably. A good labor market is what is at risk if the Fed doesn't. Your best friend Neil Dutter of Renmac. Neil said this for a while. The Fed speak is starting to feel offside relative to where the economic data is coming in the labor market.
So here's the issue, and this is something that Claudia Sahm did a great job highlighting yesterday. She nailed the Sahm rule, which is basically a certain amount of increase in the unemployment rate over a certain period of time always indicates recession. She said if the Fed waits until that gets triggered, they are too late. You are already in a recession and they have to get ahead of it. Which brings us to the inflation point. Neil Dutta, as well as Claudia Sahm, pointing to the fact, and also Austin Goolsbee, we should say, saying that basically the more inflation comes down, the more restricted the Fed gets, and it's unclear whether it's necessary. That, I guess, is really the question that I have about services, and the reason why I'm focusing on ISM services. Does it show ongoing strength that could suggest inflationary pressures down the pike, or does it also sound more of the all clear that Jay Powell was trying to coalesce around a little bit more?
That comes at 10 a.m. Eastern time. Look out for that economic data. The broader price action looks like this in the equity market on the S&P 500, largely unchanged through most of this morning. Just about unchanged again on the S&P. It will be a shortened trading day. I've gone through the times a couple of times. It's worth doing again just in case you missed it. 1 p.m. the stock market closes. 2 p.m. the bond market closes. Lisa will tell you that's because the bond market and bond traders work harder. I'm sure lots of you disagree with that, but ultimately that will be the take from fixed income. What did John Stolffer say about bond traders yesterday? What did he say?
Just want attention. They're looking for attention from the Federal Reserve.
Okay.
They're just driven by ego and the day-to-day, and I got a lot of response from that, actually, and some people said, yeah, so.
I'm sure you did. Bit of news on some personnel moves. This coming out just moments ago that JP Morgan chief market strategist Marko Kolanovic is set to depart the firm. That crossed in just moments ago on the Bloomberg terminal. The JP Morgan chief market strategist, Marko Klanovic, to depart the firm. The JP Morgan price target in the investment bank on the S&P 500, last time I looked, Lisa, it's in front of me now, 4,200. That's from Dubravko Lekos-Bujas. Marko Klanovic's had a difficult time calling this equity market over the last couple of years.
Both on the way up and on the way down at a time where there's a real question of whether there could be some sort of recession. They see yes. And then what the read-through is to a financial market that has been upheld by artificial intelligence, as we heard earlier, from a JP Morgan strategist, global market strategist, how the pillars of this market are really being held up by complex carbohydrates and protein, considering some of the euphoria, and not Twinkies, the euphoria around the likes of NVIDIA and other AI darlings.
Your line, and not theirs, of course. Coming up this hour, Sonal Desai is going to be joining us. Franklin Templeton, as Chair Powell says the Fed needs more confidence to cut. We'll speak to Geetha Raghunathan of Bloomberg Intelligence on Lisa's favourite story, Paramount and Skydance reaching a deal, and Mark McCormick at TD reacting to today's jobs data, 8:15 for ADP, 8:30 for jobless claims. We begin with the big issue, Powell and the path to 2%. Sonal Desai of Franklin Templeton saying this: incoming economic data is starting to show a cooling that is likely welcome news for the Fed. There is growing space to cut rates before the end of the year. The market is now pricing at a cut in November and likely another one in December. More importantly, I expect this next rate cutting cycle to be short and shallow, absent some exogenous shock. Sonal joins us now for more. It's not great to catch up with you. We can go through a lot of that. Let's just start with the short and shallow piece of the call. What's short and shallow? How short, how shallow?
I think that the end point is not in the threes. I think it's more like 4, 4.25. It's been my call for a while now. I don't agree with Fed Governor Williams. I definitely don't think that the neutral rate is going back to 2% less than the pre-GFC level. I think the neutral rate is around 2, 2.5, and that means with inflation at 2, Fed funds neutral should probably be at around 4, 4.25, and that to me is short and shallow, going from where we are right now to that point. Absent exogenous shock means absent essentially something which causes a recession, is what I would say.
Do you think maybe the Trump candidacy has the potential to cause that? You knew it was going to go there and go there early. Do you think it has the potential to?
So, here's the thing. I think there's so much of focus on the Trump candidacy versus the Biden administration, lots of focus on a blowing up of the fiscal deficit. Holy cow, we're looking at 7% this year. And we're looking at the last 3 years of fiscal deficits, which are enormous. They are enormous by any stretch of the imagination. These are massive fiscal deficits. And that happened in the environment of a split House-Senate administration. I think we should not underestimate the U.S. government's ability to run deficits under pretty much all scenarios. So I would say that is the Trump administration going to be notably worse than a Biden administration? We don't know enough about the policies, to be honest. And I will say this, that every time we talk about expansion of tax cuts, it's important to recognize that there's been a tax promise on the part of the Democrats, and that is not to increase taxes for those making less than $400,000. And most estimates show that's a substantial part of the Trump tax cuts. They were disproportionately targeted towards high-income earners, but in sheer quantum, a large amount of the cost of those tax cuts comes from people who will hopefully continue to be protected into the next administration, regardless of who comes in.
So let's put the two ideas together. This idea that the neutral rate is 4 to 4.25%, and the idea that there probably will be a propensity to spend, regardless of whether it's a split Congress or whether it's an all-Republican Congress. Does that mean that the 4 to 4.25% neutral rate that you're kind of gaming out has a political implication based into it, just based on the deficit? That is the premium for where the deficit is, or is that without that kind of added on? In other words, could you be gaming out 5% 10-year yields or north of that based on just the deficits alone on top of that neutral rate?
Oh, well, absolutely. 10-year yields, but I'm not talking about that in the near term because, we've got to think about the medium to long term and the near term. And I talk short and shallow cutting cycle mechanically, the Fed cuts. I think long-end yields react. I don't see massive reduction in long-end yields. I've been calling for this particular range. That's how we end this year. I don't anticipate during a Fed cutting cycle to see a massive ratcheting up in long end yields. But if we are looking at post-cutting cycle, the Fed is running at around 4.25. Absolutely, long end yields would be north of 5, 5.5, and potentially, no, north of 5, but or even 5.5, depending on how that deficit picture plays out. So I want to distinguish between what I think about in the next year or so of cutting cycle and then post-cutting cycle, year and a half, once we get to the cutting cycle.
You know,
Does that make sense?
Yeah, that makes sense. So basically, there's sort of two time frames here. There's sort of the question of, yes, cuts, but not that far, and then what you could potentially see down the line and the lack of visibility, the fog of 2025. A question here on what this means for credit, given that before the pandemic, people said never would we see benchmark rates get above zero, and if we ever did, certainly to this level, you would see a rash of defaults. That really starts to get tested as Survive to 25 gets, you know, sort of outdated, and suddenly you have companies really have to exist in this time frame. How much does this benchmark neutral rate that you're looking at challenge the concept of these bullish calls on credit, given how tight spreads have gotten?
You know, corporates have been, if I talk about the broad swath of corporates, they have actually been, I would dare I say, surprisingly prudent. Because remember, it wasn't Survive till 25. It used to be this year was going to be the wall, the maturity wall. That maturity wall keeps getting pushed out because corporates have, in an important way, refinanced, and they have managed. I think we need to look at the underlying economic fundamentals, which I don't have a baseline deteriorating massively. If that doesn't happen, I think actively choosing corporate risk still looks like a pretty viable way to go, but you have to be active. Clearly, the cushion in terms of spread has contracted massively at this point.
So now we've got to leave it there. It's got to get your thoughts as always. Sonal Desai there at Franklin Templeton on the bond market. Shout out to Liz Kappa-McCormick, who just got hold of this note from Jan Hatzius of Goldman. Trump's tariff proposals could raise the average US tariff rate by 16 percentage points to nearly 20. Net implication for monetary policy? Take a listen to this. This is the Goldman view. Hawkish to the tune of 130 basis points because the large hawkish inflation effect clearly outweighs the smaller dovish growth effect. It's quite cool. It's about 5 hikes.
Which really raises the issue of how you can get ahead of 2025. I'm just sitting here internalizing that kind of idea. Why we were talking to Sonal Desai about what that benchmark neutral rate really takes into account. Would it have to be that much higher? Does that limit the rate cutting cycle that the Fed can really engage with?
We're going to see more notes like this, that's for sure, over the next couple of days. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Biden's favorability number saw the largest single-week drop in nearly 3 years. That's according to a leaked memo from a pollster published yesterday by the news site Puck. Biden's debate performance last week cemented concerns about his age. The memo says a number of alternate Democrats now perform better in the polls against Trump than Biden does. That includes Transportation Secretary Pete Buttigieg, Michigan Governor Gretchen Whitmer, California Governor Gavin Newsom, and Vice President Kamala Harris. Owning a house is now less affordable for average earners in the U.S. than any time in the last 17 years. In the second quarter, a typical home cost rose to over 35% of the average U.S. wage. That's the highest since 2007 and up 32% from last year, according to a report from Atom. Pricey markets in the West and Northeast had the biggest declines in affordability, including Orange and Alameda counties in California and Brooklyn and Nassau County in New York. 22 million people to fly over the July 4th holiday, while the AAA is expecting more than 60 million people will drive. And that's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, we'll get you some morning calls plus Geetha Raghunathan of Bloomberg Intelligence as Skydance and Paramount reach a preliminary deal. Can we really close this, finish it, and kind of move on?
I think some people want that to happen.
Yes, some people called Lisa from New York City. That conversation up next. This is Bloomberg.
a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It has just gone 8:15 Eastern Time in New York City, and that means we've got an ADP report for you. With those numbers, it's Mike McKee.
Good morning, John. Well, I'm not sure how you take this number. 150,000 jobs in June, according to ADP. Now, remember, ADP measures only private sector employment, and that 150,000 is pretty close to what we got, what we are expecting from the non-farm payrolls number, private sector employment on Friday. According to ADP, annual pay up 4.9%. That's a little more than the Fed wants to see. In terms of job creation, largely in the services sector, 136,000 there. In terms of manufacturing, a loss of 5,000 jobs, 27,000 construction jobs were added. And this is large establishments, 58,000, medium establishments, 88,000, small businesses only added 5,000. Now, we've seen in the small business report that companies are still reporting it's hard to find workers for small businesses, so that may be part of it. But all in all, this is kind of a middle of the road, I guess you'd call it, ADP report. They, of course, say they are not a forecaster. It's not a forecast. It's just a separate number from payrolls tomorrow, but everybody will sort of mark that into their books.
So, Mike, let's look ahead to the data through the rest of this week, through the rest of this morning. Jobless claims in about 13 minutes. We'll get the ISM employment component at about 10 a.m. Eastern Time, going into the payrolls report on Friday. What would you look for from claims, and perhaps more specifically, Mike, continuing claims? What's to learn from that over the last few weeks?
Well, what we have seen over the last few weeks is it's getting harder to get a new job if you've lost yours. Continuing claims have continued to increase. We've seen some volatility in initial claims, but they are higher than they were 3 weeks ago. So does that continue? Do they stay higher? Does it suggest that the labor market is definitely slowing down? That's what we'll look for at 8:30. 10 o'clock in the services employment aspect of it. This ADP report showed a lot of service sector job hiring compared with other sectors. Does that show through in the ISM numbers? We can sort of reconcile those two things. And of course, at 10, we'll be looking at the headline for ISM services. It jumped last month. We'll see if there is still that kind of strength in the service industries.
Just sort of to lead forward to Friday, all of this is sort of the big drumbeat to Friday's non-farm payrolls report. And we've been playing around with the idea of what would it take to really change the tone on the Federal Reserve, to really bring forward a July rate cut, to lock in a September rate cut. What are you hearing in terms of expectations? Right now we're looking for the creation of something like 190,000 in terms of jobs created in the month of June. What would the threshold have to be to really change the narrative on the Fed?
Well, I don't think it's going to change the narrative on the Fed. It may change the narrative on the Fed in the markets because we still have some inflation data to come with, and also the PCE numbers before the Fed's next decision. But the markets are probably looking for something south of 150 to more or less bring September into play, although other data could move that sooner. Anything north of the 190 is going to push September maybe off the map. And remember, the 190 that we're anticipating this week was pretty similar to what we were anticipating for the May payrolls report, and it came in at 272. So there can't be a lot of confidence in what the consensus is at the moment.
Hey, Mike, great to get your thoughts. Mike McKee of Bloomberg. He's going to be back with us in about 10 minutes' time when we break down jobless claims. ADP coming in at 150, the estimate 165. Jobless claims, 235 is the estimate. Previous week, 233. We'll get those claims for you in about 10 minutes. Let's get you some morning calls. Let's start there. First up, Wedbush raising its price target on Tesla to 300. Analyst Dan Ives saying the demand story has taken a turn for the positive and highlighting his new bull case of 400 for 2025. We're up another 2% on Tesla. Next up, Deutsche Bank lowering its price target on Nike to 92. The analyst pointing out that more investor patience is needed thanks to steep sales revisions and a weak Chinese market. And finally, Raymond James maintaining its market perform rating on Paramount. The analyst saying, quote, if we have learned anything from the Paramount process, and to quote Yogi Berra, it ain't over till it's over. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, how close are we to this one being over?
No idea, John. I mean, to say that we've seen this movie before multiple times is an understatement. I mean, this has had more twists and turns than, you know, a race course, really. So we'll see what happens. But again, I have to see it to believe it. And, just 3 weeks ago, this deal was completely struck down when Shari Redstone walked away. It looks like they have some new merger terms. But again, if there's one thing that we know about Shari Redstone, it's that she is completely unpredictable.
You say just 3 weeks ago. Just yesterday, it was Barry Diller going in for this as well. Geetha, what's going on?
Yeah, a whole lot of players obviously on the scene here. We know as of yesterday that Skydance is back in the mix. Of course, this was the one party that was negotiating very, very aggressively with the Redstone family. Again, that deal kind of completely fell apart 3 weeks ago. But in the meantime, there have been so many other different bidders who've expressed interest for National Amusements, which is the controlling shareholder in Paramount. Yes, you mentioned Barry Diller. He's expressed some interest. Of course, he's a huge digital media conglomerate. There have also been some reports about Edgar Bronfman being interested, as well as Stephen Paul, who is a Hollywood financier. But again, we really don't know what's going on. And there are all kinds of different dollar values here. In terms of Skydance, they've come back with $1.75 billion. That seems like it's slightly lower than where initial news reports had pegged them at, which was about $2 billion. But then I think when the deals were falling apart, it was probably closer to maybe $1.7 billion. So maybe this is slightly better than what they had initially offered. But I think the main thing that we're seeing here is there is stronger indemnification language. And this is something that Shari Redstone has been really concerned about. She's been concerned about lawsuits just because the Skydance deal is going to favor her over all the other Class A as well as the Class B shareholders. And she knows that's going to attract a whole ton of lawsuits. So there is stronger indemnification language. But the one thing that Skydance has been against, and it's been a non-starter for David Ellison, is that Shari Redstone had been kind of pressing for this majority of the minority kind of approval, which was basically all of the Class A shareholders getting a say in whether the deal should be approved or not. And it looks like that has finally gone away. So that's no longer a sticking point.
Geetha, John keeps kind of making fun of me because I'm not that particularly interested in all of the ins and outs of this roller coaster that we've been seeing, or this pin turning kind of road. I just want to understand, is this billionaire poker, or is there a deeper kind of broader takeaway from this?
I mean, the sands are really shifting. I mean, the winds have been shifting in the media landscape here. It's obviously clear, Lisa, that the more and the more that this process drags on. I mean, we've been seeing this thing now play out for over 6-7 months. The more that it drags on, obviously, the less the assets are going to be worth. And I think Shari Redstone realizes that. She knows that something has to get done. At the same time, we know that this is maybe one of the last big iconic assets. I mean, you have a huge film studio. You have some great broadcast network assets as well as stations and CBS. There is, a streaming business, again, that the jury is out whether that's a good or a bad business. There is the linear network business, which is what is weighing the whole model down. But again, it would be an understatement to say that assets like these are not going to come around often. So obviously, everybody wants to throw their ring in the hat.
Geetha, you make it interesting, okay? Geetha Raghunathan of Bloomberg Intelligence. Geetha, thank you. The latest on Paramount, that saga continues, and I guess it ain't over till it's over, but I think a few of us are hoping it might be over quite soon. Coming up very shortly, we'll get some jobless claims data for you, and we'll get the views of Thomas Simons of Jefferies and Mark McCormick of TD Bank to get some reaction to that. And Lisa, push ahead to what we'll hear a little bit later. You've been looking forward to the ISM services. I have as well, particularly the employment component of that, to get a feel for what we may or may not hear on Friday.
This has been the pillar of support for the U.S. economy. We've seen manufacturing turn a little bit lower. The revival there hasn't taken off. If you see services weaken, that will be a real red flag. We've heard that from the ECB because they have a similar kind of situation with respect to services and inflation there. In the U.S., that really is what a lot of people are focused on.
You think if we get a big weakening over the next couple of weeks, it opens the door to a July cut, or do they need to sort of lay this up, tee this up perfectly so they can go in September after a big Jackson Hole speech that sort of takes us towards this mid-cycle adjustment?
You know, I don't know. I don't know how high the bar is to really talk about July once again. I do know that there is this feeling that we're reaching a tipping point. Mary Daly has been ahead of the game when she's talking about that. And we definitely heard a slightly different tone from Jay Powell yesterday. So I honestly don't know the answer at a time when people are still expecting pretty strong readings, particularly in the services and particularly when it comes to travel.
Powell testimony next week. One to watch. So, you know, if you want more from Chairman Powell after the payrolls report, you'll hear from Chairman Powell after the payrolls report. You'll hear from him for like hours in Washington.
I wonder if they ask any real questions about what tariffs do to their outlook. I mean, he's going to say, we don't get involved, we'll deal with the thing that we have to deal with, et cetera, et cetera. But Goldman Sachs coming out with that call.
That's quite cool, isn't it?
5 rate hikes. That is what it's equivalent to in terms of the inflationary read.
Yeah, it's pretty amazing. You know, I often get excited about these testimonies, and then what happens? It's like, you know, people making YouTube clips for their own campaigns in November.
Yeah. What do you think of Twinkies?
Yes, something like that. From New York, this is Bloomberg.
Politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Jobless claims about 20 seconds away. The score's going into it. Equity futures look a little something like this on the S&P 500, negative by 0.1%. On the Nasdaq, a similar move. Just moments ago, we got the ADP report. That came in at 150. The estimate was 165. Another taste of the labour market coming right up. After this, we'll get the ISM a little bit later. Then it's on to payrolls on Friday. With the jobless claims number, let's get back over to Mike McKee. Morning, Mike.
Good morning, John. Very little change in jobless claims. 238,000 last week, 1,858,000 in terms of continuing claims. So that's a little bit higher than it was, but we'll see when we get the revisions numbers out in just a second, waiting on those. But it doesn't look like there's a whole lot of change at this point in the status of the labor market. At least not in terms of claims. 238,000 last week, revised up to 234 from 233. So it's a gain of 4,000, and continuing claims were revised to 1,832,000. So we are up by about 25,000 on continuing claims. So it does look like a little bit of deterioration continues in the jobless claims area, but still very, very low.
Just creeping a little bit higher, Lisa. We didn't see that deterioration in jolts yesterday at all, moving in a positive direction, but you see just a little bit of it there, just a little crack.
Honestly, I just pulled up a chart of continuing claims over the past year. You could just see a marked increase over the past 4 weeks. That's the kind of action that people are going to hone in on, is saying possibly you are seeing some sort of pivot point, inflection point in the labor market.
Mike, what do you make of that, what that chart looks like?
It is maybe a pivot point, but it's the kind of thing we're not going to know for some time, because we're going to have to see, with jobless claims, they come out every week, so we're going to have to see if this continues or if it's a short-term thing. Now, we're getting into July. That's usually when the automakers shut down their plants for retooling, and we lose some workers to jobless claims on a regular basis, so that'll be a seasonal adjustment question coming up. So it's going to be kind of hard to tell from claims if we've reached that inflection point or not. That's why the Fed's going to be more interested in what's happening with the unemployment numbers than the claims numbers. Claims will give you a hint, but it doesn't really give you a definitive answer to where we are.
It does give you a hint, though, that things are changing, and they are changing in a sort of linear way, at least when you take a look at continuing claims, at least over the past couple of months. You do wonder if the Fed's going to try to get ahead of this. Claudia saw him yesterday talking about how once they wait until they see the whites of the eyes of a cracked labor market, it is too late. Do you hear any sense of that among Fed officials, as we've heard a number of them speak over the past couple of days?
I don't think we've seen that yet. We're seeing people making the argument that, yes, we have to be aware of this, because they've been pushing on the idea that they're looking more at the employment part of their mandate than they were during the last year, when they really focused on inflation. But nobody has suggested yet that they're close to the edge. The general feeling is we're still seeing a strong enough economy that we can wait. Now, what does wait mean? That's going to be the thing to look for perhaps next Tuesday from Jay Powell. Does it mean that they have till the end of the year? They think it's going to be that strong, or are they on alert for any kind of change that comes very quickly? We might mention the Somme rule coming up on Friday. If we should see that trigger, then the markets are really going to react and argue that the Fed needs to hurry up, or they're going to be behind.
I'm sure some super dialed-in lawmaker in Washington, D.C. will ask the question, Mike, in that testimony next week. Mike McKee, thank you.
Really?
Have you got doubts?
Really?
Is that what you think of our lawmakers in America?
You always like to... I love this. You like to put this on me. He just basically projects out. He's like, oh, Lisa is really undermining the U.S.-American legal system.
I've got way more faith in them than their teams to come up with better questions. Their staff, yeah, exactly. Let's bring in the team. Thomas Simons at Jefferies, Mark McCormick at TD Bank with us around the table. Thomas, let's start with you. Won't talk about that. Don't worry about that.
Okay,
let's talk about jobless claims. What do you think is sort of normal and what's worthy of worry as we start to creep a little bit higher?
So normal is really hard to define, right? I mean, we've had many different states of normal in the last 4 years, and I think that on an almost daily basis, there's a new sort of remark of where normal is, right? Last few months, it seems like 230K is more or less normal, 220, something like that. I think that that's probably a decent enough benchmark for the next few weeks at least, but as you get into the end of the year, we'll probably continue to creep a little bit higher, right? If you go from 230 to 250 or 260 over the course of 6 months, that's actually exactly what the Fed wants, right? Like the whole thing with like the SOM rule and these inflection points and whatnot is that this concept that economic data goes down on an elevator and up on an escalator, right? Like there's momentum that becomes self-reinforcing. If we in fact actually get this very gradual decline in labor market pressure, I think that's actually quite a good outcome.
Okay, let's build on that a little bit more, because Citi were with us earlier and they said 260 is the danger zone for jobless claims. They've got a different view on this. They just don't think that you stabilise at this lower level. You don't plateau here, that once this journey starts, it continues.
Right. And I mean, you look at 85 plus years of labor market data and it supports that fact, right? That when things start to go wrong, they get wronger and wronger, right? But the issue is, I think we have a very different set of demographics that, is not consistent with any other real, labor market episode we've had in the economy before, right? We have a shrinking prime age labor force as a percentage of the overall population. We're 10 plus years into baby boomers retiring at a rate of about 10,000 people per day. We still have about 6 more years of that to go. So the labor market shortage, the scarcity became extremely acute after the pandemic was over, but that's not a temporary factor. That's actually a secular trend that's going to continue for years.
Mark, is it different this time?
I think what's important is really kind of considering the supply side of the economy as well, along with the growth side. Like everyone is very focused on growth for the Fed, but it's like we kind of dropped the ball that inflation is still kind of the key metric. And it's like what we do is we run strategies and we're trying to figure out which themes are driving the markets. Like everyone's talking about this, but this factor is what makes money, and no one's talking about that anymore because it's not as interesting. But a key thing is if you look at currencies, they are trading more on inflation than growth. And if you run back tests on data surprises, consensus revisions, data strength, those things aren't working. So while it's interesting to kind of work through the data and say this is important, this is what's driving the Fed, at the end of the day, what's going to drive the Fed in the next 3 months to September is inflation. So if inflation's hot next week, or if it's hot in the next month, or if it's one hot inflation report could kill the entire narrative that they will cut this year. So I think that's one of the important things to think about is what we tend to do from a market strategy point is kind of aggregate all the data, scale it, compare it to different countries, and which country looks better. Right now, it's still very clear that U.S. is slowing, but it's slowing from a very hot level, but it's still good, and it's still better than most of the rest of the world. So I still think that's a key consideration that while we could move into this inflection point where we go from linear to nonlinear, and that's kind of how complex systems work, but if it is a linear slowdown, you're just moving in a direction that markets are already prepared for and absolutely priced for this year.
So you don't think that there's a point at which the labor market becomes a check on the ultimate read that you say is inflation?
If it's nonlinear, yes, but I think the thing on the inflation side is the drivers are coming from the supply side. Demographics, geopolitics, the changing nature of technology, the pricing around those technologies. I think when you think about war and some of the things that we've had on the energy side, all the things that are happening on the supply side have been accelerating through the pandemic, but these are things that started in 2010. If we kind of look at all the, if we look at like what is happening with globalization and what is happening and how that impacts national sovereignty and politics, those things are all moving in a direction. Even if you think about immigration trends, all these things are potential drags on the supply side that makes inflation stickier over time, which has nothing to do with demand or growth. So I think those are things that are happening behind the background that the Fed has no control over that they have to be cognizant of. And also in the next couple of months, we're going to see base effects also just push inflation higher just naturally from, the math of things moving around. So those are considerations. I know the market is really focused on the growth story, but we're still like really focused on the inflation side for the dollar, for the market, and for the Fed.
Tom, do you agree?
Yeah, more or less. I mean, I think that our views on the supply side are very similar. I've kind of been trying to, and again, sort of assessing new normal, like looking at what consumption patterns are looking at, like, and kind of understanding this dichotomy of, haves versus have-nots in the economy. I think that there's probably some dynamic where, we focus all this consumption pattern recognition on, people traveling, entertainment, all these things that are really, services that are enjoyed by higher income households, right? A lot of that happens in the second half of the year, right? So, like, while we've seen growth slow down, we could just have all of that activity kind of concentrate in the second half, and then we'll see the kind of logjam of supply not really being able to meet demand in certain sectors, right? I think that in the service sector, that's going to be something that we see consistently over time, again, for many, many years. Certainly you see it in the housing sector. I mean, like, that's probably the best example. I think that a lot of folks who've been more sanguine on inflation have been expecting that we're going to get some delivered disinflation from rent and the OER and whatnot. We may get that for a short period of time, but at the end of the day, we're still very undersupplied with shelter, and I don't think that you can consistently expect that that's going to be something that's relatively soft over time.
Let's complicate things, and I mean really complicate things. Jan Hatzius of Goldman with this to say in Sintra, Portugal, I imagine this will get picked up everywhere. On Wall Street, in political circles, maybe much more so. This is what he had to say. The Trump proposals coming from the Donald Trump campaign could raise the average US tariff rate by 16 percentage points to nearly 20%, which would be the highest in the post-war period. So that's sort of what their base case is. And this is what they think the implications are for monetary policy. Hawkish to the tune of 130 basis points, because the large hawkish inflation effect clearly outweighs the smaller dovish growth effect. At Goldman, Jan Hatzius is sort of modeling out the potential for something like 5 hikes from the Fed based on policy from the Trump admin. What's your reaction to that?
So my view has been that if the Fed were to have to hike again, they would have to hike something like 5 or 6 more times. Like, one more hike wouldn't really do too much, right? If we're pricing in one hike, we should price in substantially more. I don't necessarily share the view that tariffs should should generate that sort of reaction. I remember even in 2016, 2017, when Trump was initially putting on his big tariffs against China, Yellen's reaction was like, hey, look, tariffs increase a price level once, but they don't create like an upward slope of prices, right? So it may be needed to kind of, maybe offset one vector of inflation, but I would be very surprised if Trump actually did imply, put in policy a tariff that was that high. And I would be equally surprised if a Chair Powell would react that way.
Well, there's a lot of scenario analysis taking place right now. Mark, work with us. Let's say that is the assumption, and let's say those policies are delivered. Do you think that would be the reaction?
Well, yeah, that's a very spicy proposal. I think part of it is that it's, again, two-sided. Like, you have lots of inflation, and the other thing is you are taking away growth. So we are in Goldilocks right now. Our macro vol models are basically at the lowest levels we've seen through the cycle. Carry trade's kind of incrementally blowing up here or there, but carry does struggle when you start to see volatility. But a big piece of that is if you have, like, essentially growth being taken away from China and Europe and even parts of the US, and then you have higher inflation, you have the Fed responding to that. The initial move is a much stronger dollar. It is a complete decimation of Goldilocks and a move into a higher vol environment. So I think the markets are not prepared for this at all. And I think that's, again, you come back to like what happened in the debate, and then you kind of look at, we had the French elections over the weekend, which were important, but as soon as we got the Supreme Court ruling kind of coming out on Bloomberg, dollar rallies. So we are like right back into the kind of silly season here where every headline related to a poll or who's happening, is Trump leading, all these things are going to drive markets now, at least, if not through the summer, September, it's on. So if we move into that direction, just the thought or the uncertainty of the Fed having to reverse course and actually start hiking again will be very bad for risk markets.
Either way, Tom,
Yeah.
and this is something that we keep talking about, what does this mean in terms of what the neutral rate could potentially be? Not just rate hikes, but just how far the Fed can cut. We were talking to Sanal Desai. She's talking about 4 to 4.25%. So even as we talk about the idea of a labor market that's normalizing, there is a floor to how far they can go. Do you agree with that?
I do, actually. It's more or less right around where I think the terminal rate is going to end up, probably sometime towards the end of 2026. I think that it's something the Fed really needs to be very careful about. We see more research coming out, for instance, from John Williams at the New York Fed, just put out another paper this morning saying that he still doesn't think that the R-star has moved very much. You know, I mean, I have to give some deference to him. He's spent probably more time than I've been alive studying this, so I can't really, you know, say that I know more than him. But I
just aged him a lot, though.
Well, I de-age myself, I think. I like focus on me a little bit more. So
Are you a bond trader?
Yeah. I don't think that it's that easy to dismiss that we're in the old normal. That, you know, our STAR is still around 2.5%. You know, it wasn't that long ago that the Fed still thought it was, you know, quite a bit higher. So. I think that if we do get, for instance, another wave of tariffs, it really lowers potential growth. And then I would be willing to entertain the fact that perhaps we are moving to a lower rate environment overall, because it's functionally like a tax, right? Like, as much as it's you know, tariffs are on the exporting countries, at the end of the day, it's paid by the consumer, and it's just a dead weight loss for them, right? So they'll have to take that consumption out of something else that just lowers the sort of dynamism of the economy, and I would think probably lowers the, you know, potential interest rates.
Mark, given all of this, why would anyone short the dollar? Why wouldn't everybody be as long as the dollar as they possibly could right now?
That's my view. I would agree. It's you have, like, just on the factors that we run, the dollar is ranked #1 in our trading baskets on growth, on risk correlations, on inflation, and carry. And so in this environment, like, the one thing, if you look at correlations of the dollar to, like, risk models, pre-COVID, it wobbled. Sometimes it was cyclical, sometimes it was a safe haven, kind of moved around. Since the pandemic, that correlation has not gone below 0. So essentially, when we're risk off, the dollar is the only safe haven. The yen is no longer a safe haven. Swiss franc's no longer a safe haven. They are cyclical currencies. So I think in this environment, especially if we are focused on inflation or if we are focused on growth, the other interesting thing is the only other places that offered yield are the places where everyone's been positioned in FX for 2 years. So you bought the commodity terms of trade story, you bought the emerging markets that were the sellers of those. They were also the ones that offered the carry, but Latin America is no longer kind of immune from all of this. So I would say, yeah, the other thing is the dollar represents at least 62% more yield pickup than all the currencies that we track. So to me, this is wouldn't say a no-brainer, because that's, you know, kind of, that's the last thing you should say, but I don't see the upside for the euro or G10 currencies in the second half of the year, but I feel like this is broad dollar. It's not RV markets anymore. You should just be long the dollar into the second half of the year.
Mark McCormick at TD. Mark, good to see you alongside Thomas Simons of Jefferies. If you are just joining us in the last 30 minutes or so, we've had some economic data. 150 on the ADP employment report. 150,000 was the number. The estimate was 165 in our survey. Had some claims data, continuing claims, creeping higher once again. Claims 238K. The estimate was 235. Payrolls, of course, coming on Friday. The ISM in about an hour and 15 minutes. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's get across to Danny Berger. Hey, Danny.
John, you stole my line. I was going to go over the jobless data. I'll do it again in case you missed John do it. Initial jobless claims coming in at 238,000. That is a touch higher than the estimate of 235,000. Continuing claims rose for a 9th straight week, the longest stretch since 2018, and an indication that a growing number of people are having difficulty finding a new job. Earlier, as John mentioned, we had the ADP report. Private payrolls increased 150,000 last month. The median estimate in Bloomberg survey called for an increase in 165,000. JP Morgan's chief market strategist, Marko Kolanovic, is leaving the firm to explore other opportunities. Right, according to an internal memo obtained by Bloomberg. He's a 19-year veteran at the bank. Kolanovic and the team at JP Morgan had a rough few years trying to call this market. He was bullish for much of 2022's slump and turned bearish as the market bottomed. At 4,200, he still has the lowest, or had rather, the lowest S&P 500 price target among analysts, as the S&P hit 32 record highs this year. Donald Trump's sentencing in his New York hush money case has been delayed by 2 months to September 18th. This is so judges can review the impact of that landmark U.S. Supreme Court ruling about presidential immunity. The sentencing would come less than 7 weeks before the likely Republican nominee's rematch against President Biden on November 5th. Trump faces up to 4 years in prison for the criminal case. And that's your brief, John.
Of course, it sounded much better when you did it. Danny, I'm sorry about that. Sorry about that. Up next on the program, setting you up for the day ahead, you're watching Bloomberg Surveillance.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election?
it's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
What do you do on mornings like this? Do you wait for the ISM or do you get in the car and head to the beach right now? How does it work?
You obviously wait for the ISM.
Of course you
need
do.
to.
Yeah,
That is
of
what
course
I'll
you
be
do.
waiting for.
You stay in the city all week until payroll drops on 8:30. That's what you do.
And even on Friday.
Yeah, sure, same. Counting down to the opening bell. Here's the trading diary for the rest of the week. ISM services data coming up at 10 a.m. Eastern time. Then the FDR is going to be jammed coming out of New York and getting over to Long Island. It's going to be so busy, isn't it, after 10 a.m.?
Yeah, no, that's true. That's why.
10 minutes, 2 p.m. People might hang out for that. Equity market closes at 1 p.m., remember. Bond market closes an hour later.
You can't even keep a straight face with that one.
Payrolls on Friday. Plus, of course, tomorrow, look out for the team in London carrying our coverage of the UK election. On Friday, just a programming note, Lisa and I won't be here. We would love to be here, but we won't be here. Danny and Manus will be doing the coverage for you on Payrolls Friday.
We begged to be here, and they said no.
I actually really asked, and they didn't want me here.
Yeah,
So
they were
there you
like,
go.
please.
They just stay away. Let's turn to geopolitics. Anne-Marie sat down earlier for an exclusive conversation with Ukrainian President Volodymyr Zelensky. She joins us now for more. From Kyiv, Anne-Marie, good morning.
Good morning, John. Russia's invasion of Ukraine is in its third year. They're entering their third summer, and yet top of mind for Volodymyr Zelensky seems to be what we all watched, the U.S. presidential debate and where U.S. politics are going. And I got the sense that Volodymyr Zelensky does not want to take any chances with the outcome in November, and he wants to get in a room with former President Trump. Take a listen.
I'm potentially ready to meet with President Trump. Of course, for me, it's very important. So for me, it's very important not to have any surprises, which can be very tragic to Ukraine. I mean, that I don't want to have any surprise. I want to understand what he means. They can't. I mean, they can't plan my life and life of our people and our children, etc. That's why I'm not pushing to. I'm just, my message is if they have the plan, it can be maybe not public because of the elections, but I think we have to know it before to prepare.
So Zelensky is challenging Trump to come forward with his plan. I got the sense from him, he doesn't want to do back channels. He doesn't want to do anything that's illegal or illegitimate because the former president is just a candidate right now and he's not running policy. But clearly he wants to make sure that Ukraine is set up to potentially work with the Trump administration, because we heard Donald Trump at the debate that Zelensky watched when he he even gets into office, and Zelensky wants to hear that plan. There's lots of rumors about what it is, about potentially if Kyiv does not want to negotiate, then former President Trump would withdraw some of that aid, and if Moscow doesn't want to negotiate, then he's going to ramp up the aid to Kyiv. But Zelensky, it sounds like he's signaling he wants the conversation.
Hey, mate, just before you go, you've been in the country for a number of days, in the city, in Kyiv, in the capital, for a number of days as well. Just describe what that's been like this week.
Well, right now, Ukraine has changed some of the mobilization, so you are seeing an uptick of the draft of more younger men out to dinner. A waiter actually apologized for how slow they were because it is affecting their economy already. But the issue they have on the battle lines is not so much the weapons right now when you talk to military analysts, it's the manpower. So you can see that still in the city. Also, they've been living this for more than 2.5 years, but I've been quite new to it. Every single evening, almost, you're woken up, you have to get out of bed, and you have to go into a bomb shelter. This happens at night. This happens at your desk while you're working. So this is still a society that is living with this paranoia and anxiety on a constant basis.
Heartbreaking. Thanks for sharing the experience, Anne-Marie, and once again, fantastic work. Anne-Marie Hordern in conversation with the Ukrainian leader. Lisa, incredibly savvy political media operator, to turn to the camera and speak in English at a time when he felt like he really needed to.
Basically saying, I don't want to have to rely on somebody else to determine my future. I want to be able to prepare in advance. Taking a step out, an incredibly timely interview by Anne-Marie, given the fact that, as you pointed out, it's not just how the debate reads across America. It is how this debate and how the broader election race in the United States affects the entire world. We have heard the ramifications from leader after leader, very much front and focus from Volodymyr Zelensky, who frankly has really been on the receiving end of both the delays as well as potentially the aid to continue this war.
A lot changed for a lot of people, and maybe even many countries after the debate on Thursday night. On Friday, looking ahead to Payrolls Friday, here's the lineup for you. Peter Oppenheimer of Goldman Sachs, Sarah House of Wells Fargo, Priya Misra of JP Morgan, Jeff Rosenberg of BlackRock. A stacked Payrolls Friday lineup for you. Danny and Manis are going to run you through that. The estimate for Friday, 190,000 from Lisa and myself. That does it for us. Have a wonderful long weekend. For those of you that can celebrate a long weekend. For the rest of you, particularly stateside, have a very blessed 4th of July. From New York, this was Bloomberg Surveillance.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
From New York City, for our viewers worldwide, I'm Matt Miller. We're seeing futures lower after a slew of economic data hits the tape. The countdown to the open starts right now. Coming up, futures lower as data shows even more signs of a labor market slowdown. JP Morgan's chief global market strategist is stepping down after a difficult 2 years. And Zelensky challenges Trump to present his plan to end the war, part of our exclusive interview with the Ukraine president ahead. Plus, we begin with the big issue, the U.S. labor market showing more signs of cooling.
This concept that economic data, goes down on an elevator and up on an escalator, right? Like there's momentum that becomes self-reinforcing. If we, in fact, actually get this very gradual decline in labor market pressure, I think that's actually quite a good outcome.
Joining us now is Jack Janasowicz, portfolio manager and lead portfolio strategist at Natixis Investment Management Solutions. And Jack, let me just get your take right now on the labor market situation and how, the Fed should be reading these numbers, because every hint that we get that a cut may be coming usually drives the market higher. And yesterday we saw new all-time highs across indexes.
Everything that we pay attention to, from forward indicators to the current backdrop, continues to point towards a normalizing labor market. And I think when you talk about what we heard from both Chair Powell yesterday, Austin Goolsbee on top of that, and even this morning from Williams, who's talking about R-star maybe not being quite as high, it feels like they're really setting up for that September cut here. And I think the risk is that the market was concerned that maybe the Fed overstays its welcome, but you're continuing to see dovish comments coming out, and I think the market is going to start to react to that going forward here.
What are the other factors that you look at in order to continue driving this rally? I mean, we continue to hit new high after new high. How much further can we go?
I think the formula here is pretty simple, right? If anything, we're slowing probably back to trend growth. If not, maybe we settle in a smidge higher than what we've seen from trend. You have earnings that continue to grind higher in here, and also now you're starting to factor in the potential for that September cut. So when you put these three things together, that's a pretty good backdrop in here for risk appetite. Maybe we get a small pullback in here. That's just a normal reset. But that underlying trend, I think, is the one to pay attention to, which is very supportive going forward.
So you see stocks ending the year higher than we are now?
Absolutely.
All right, hang on one second. I want to focus in on the economic data for a second with Michael McKee, Bloomberg's chief economics and policy correspondent. He's in Washington this morning. And Mike, we got a slew of jobs numbers from ADP and initial jobless claims this morning. How does the labor market look to you?
Well, it looks pretty much like what the Fed would like to see, as you were just saying. The labor market is cooling, but it is not freezing, not falling off a cliff. You look at what's going on with jobless claims. They remain elevated, 238,000 last week, and continuing claims continue to climb, showing it's a little bit harder to get a job. But according to ADP, jobs are still being created, 150,000 in the forecast for private sector payrolls on Friday is 160,000, so pretty close there. You take a look at the idea of what's going to happen next to the labor market. What are we going to see on Friday? Consensus 190,000 jobs. Remember, last month we came in expecting 188 and got 272. Jobless claims were elevated in the payroll survey week. The ISM manufacturing jobs contracted 49.3 in June. We'll see what we get at the top of 10 o'clock with service jobs. And ADP, as I mentioned, 150,000. Now you look at ADP versus the non-farm payrolls private sector job creation, and it really doesn't tell you what's going to happen. For 8 of the last 12 months, private sector jobs in the non-farm payroll survey have come in higher than what ADP has suggested they would. So you've got to look for maybe an upside surprise. The question is, how much of an upside surprise? Is 190 enough to forestall any Fed action as far as the markets are concerned? And if we get higher than that, how much does it push out the idea of a rate cut out of September, out of November? A lot will be dependent on what happens at 8:30 on Friday morning.
Hey, Mike, you only travel when you're following the Fed or the Grateful Dead. And I know that the Dead and Company's in Vegas, so I'm assuming you're in D.C. for the Fed. What's going on?
I am in D.C. for Fed minutes. That's going to be another data point for markets to consider this afternoon. And unfortunately, I apologize for keeping everybody around an extra 10 minutes today. I didn't make the Fed schedule, but they'll put the minutes out at 2 o'clock just as the markets close. And we're going to be looking for any kind of indication as to what they think the outlook for inflation and jobs is going to be going forward, and whether there was any dissension about the idea that we're only going to see one rate cut this year, because obviously it was closely divided between 1 and 2. So we'll get some clues there, but it's really going to be the jobs report on Friday that's going to matter, I think, going into next week for the markets.
All right, Michael McKee there in Washington, D.C. Thanks very much for joining us ahead of this 4th of July holiday. Now, Jack Janasowicz of Natixis is still with us, and Jack, Mike mentioned the outlook for inflation. I'm assuming that your take is we're on the right path for the Fed to be able to start cutting rates, getting closer and closer to 2% on core PCE.
Yeah, absolutely. And I think the big picture level there is simply that the job market's cooling. And if we saw a reacceleration in that job market, then I think you could point to the idea that maybe inflation starts to reaccelerate, but we're just not seeing that. And the other thing I would point to, too, is there's really 3 line items that have been driving inflation. It's been the housing market, it's been motor vehicle insurance costs, and healthcare costs. And we're seeing actually 2 of those starting to lighten up. You know, last month we finally got that first month-on-month print for motor vehicle insurance rolling over. So you're starting to see some of those more sticky items that have been really accounting for all of the inflation backdrop starting to crack a bit. So again, not just the labor market, but some of the other stickier line items are finally starting to show some signs of softening.
Do you see any risks around the election, Jack? I mean, since Biden's catastrophic performance in the debate, the chances of Trump winning have climbed. Larry Summers has said Trump has the most inflationary policies he's seen in his lifetime. And now Goldman Sachs is coming out and saying, the chief economist there, Jan Hatzius, that Trump's tariffs could boost inflation to the level that the Fed has to raise rates 5 times.
You know, we're certainly seeing that reaction over the last couple of days, right? We had the significant bear steepener within the bond market. We saw a little bit of an uptick in nominal yields, but the other big takeaway there for us is simply actually pips moved higher as well. So real yields moved higher. So we're also seeing a combination of modestly higher inflation expectations potentially, but on top of that, growth expectations moving higher. And so that actually might be a pretty good backdrop for earnings going forward. It's just a question of how much higher will those inflation expectations move. And I think that remains to be seen.
How do you want to be set up into the end of the year? What's your portfolio construction look like right now, Jack?
I think we're still going to expect what we saw in the first half work probably extends into the second half. So things like large cap growth and tech still run. But for us to see that rotation out of that trade, maybe down in cap, it's really going to come down to 2 things, right? The market needs a little bit more confidence that the rate cutting cycle is going to commence, and September certainly seems like that's starting to come into play here. But the other one is that any sort of slowing on the growth front is not extrapolated into a recession or even a growth scare, but that it's simply moving back towards trend. And if we get both of those ingredients there, that I think could lead to the shift in the breadth widening out, moving down in cap, and maybe even into international markets.
What is your cross-asset take right now? I mean, you're bullish stocks. What do you think about bonds? Are you buying those if you think the Fed's going to cut more?
So right now, we think, given where we are with regard to spreads, and there's probably a floor in terms of how low rates would go, and we're sort of thinking roughly around 4%, maybe 3.75 on 10s. So not a huge potential kicker in terms of total return from the duration potential there. So it's largely a carry trade. And at this point, because we are optimistic on the equity side, we'd rather take more of that equity risk, or the risk within the portfolio, through equities. And so as a result, we're looking more on the treasury side to give us a little bit of an equity risk offset there. So really preferring rates simply because it's more of an offset to the equity risk, where we think that's where the bulk of your performance is going to be driven from.
All right, Jack, great getting some time with you this morning. Thanks so much for joining us. Jack Janasowicz there of Natixis. Joining us now with a look at the individual stocks moving ahead of the opening bell this morning. Let's go to Abigail Doolittle. Abby?
Well, let's start out with the shares of NVIDIA, because that is one weight on the markets, with the major indexes down ever so slightly. Stock is down 0.7% after falling yesterday. And of course, it is in correction territory, down about 14 or 15% from the recent high. Possibly a technical breakdown ahead, simply on profit taking. Let's take a look at some of the stocks that are working on the day, Matt, though. And starting off with the shares of Paramount, they are soaring up 14%. It looks like a deal may be back on between Skydance and Sherry Redstone. Skydance, of course, could buy Paramount's parent company, National Amusements. They own 77% of Paramount. And then David Ellison, under the old deal, was said to have merged Paramount with Skydance, and that is presumed to be the case here, too. But we don't know, so stay tuned. But shares reacting positively. Constellation Brands up 2.5%. They beat earnings in a nice way. Apparently, beer results topped analyst estimates. And then finally, Tesla up 1.6%. The gains continue into today, Matt. Over the last 6 days, up 27%. And yesterday, we were taking a look at the charts and the technical breakout. It looks as though that rise is set to continue.
All right, Abigail, thanks very much. Abigail Doolittle talking to us about some of the names moving ahead of the opening bell this morning. Don't forget, it's a shortened trading day today, and we did have, once again, all new record highs yesterday. Coming up, we're going to give you some international politics. Ukrainian President Vladimir Zelensky speaks to Bloomberg about Ukraine's dependency on global aid and Trump's plan to quickly end the war before he's inaugurated. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially, I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
As the war in Ukraine continues, funding to the country remains a big issue here in the U.S. Bloomberg's Anne-Marie Horton sat down with the president, Volodymyr Zelensky, in Kiev for an exclusive interview.
Домовлялись сторони про ceasefire. We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries' leaders who are trusted. They might have different ideas, different views on the stages how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they have almost reached the capital city. And they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart, and it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire.
But we're going to see more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
Передусім. So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict. And it would be frozen for the aggressor, it would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? What would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well,
yes, I saw
because the
debates.
answer of how this might all unravel will depend on also who's at the table from the United States.
Amongst other things, it might depend on who is the president of the U.S. Yes, that's a fact. Because the U.S., the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that or they want to focus more on their internal politics. I cannot say, it doesn't depend on me.
So did you watch the debate?
Yes, I watched the debates. So first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the U.S. media, but I watched, and like we are not electing the president of the U.S., so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard
What do you make of that?
Я скажу чесно.
Let me be frank.
Давайте, наприклад, це вирішує.
For example, well, the decision is on U.S. public. But let me just have some reasoning. Так, але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the U.S. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? We didn't the war even to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the U.S. or we'll be all alone.
And that was Ukraine President Volodymyr Zelensky speaking exclusively with Bloomberg's Anne-Marie Horton in Kiev. Now, coming up, the morning calls, and then later, Jim Caron joins us. He is Cross-Asset Solutions CIO at Morgan Stanley Investment Management. He says we're at an inflection point between inflation and unemployment amid a slew of data. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Horton only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We are looking at futures that are down a little bit after we hit all new records. Look at the NASDAQ 100 there, 20,211. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Citi is downgrading Charter to a sell. The firm says the company faces risk to estimates and valuation with the organic broadband environment getting tougher relative to Wall Street expectations. That organic broadband. Next up, BMO is upgrading Permian Resources to an outperform. The analyst says he likes Permian's increased Delaware footprint, noting that that scale, along with strong execution, has resulted in a top-tier cost structure and strong operational performance. And then finally, RBC is initiating coverage on Intuit. With an outperform rating and a $760 price target, the firm sees strong trends for the tax software company, including potential upside from generative AI. Will artificial intelligence be able to understand the U.S. tax code? I think not. Let's take a look at the markets again right now. Again, all-time highs yesterday. It is a shortened trading day today. We got a ton of economic data. We're going to get Fed minutes out later, so we have sent Michael McKee to Washington, D.C. Right now, you see futures soft with the S&P down, S&P minis down about 0.1%. Small caps are gaining with the Russell 2000 futures up about 0.25%. Not a lot of movement in bonds this morning. We see the 10-year yield at 4.40. It was at 4.41 this time yesterday. The 2-year at 4.73. The 30-year at 4.56. The euro also continues to hover in that range that we've seen right around 107, 108. In fact, it's trading at 107.84 as we speak. Coming up, Jim Caron, Cross Asset Solutions CIO at Morgan Stanley Investment Management, joins us. He says it's not the time for full risk-on positioning.
Names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable. Not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution. and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is the countdown to the open. I'm Matt Miller, moments away from the start of trading on what is a shortened trading day for the U.S. equities market. We hit all-time highs again yesterday on the indexes. Right now, futures are a little bit soft, but a lot of people, I'm sure, have already retreated to the beach. Take a look at the New York Stock Exchange opening bell. You got the United States Coast Guard ringing the bell there, and then you've got firefighters ringing the bell on the NASDAQ at the NASDAQ market site. Let's take a look at some of the other assets that we're watching. We're going to talk in just a moment to a cross-asset strategist, so it's appropriate to look at the euro stuck in a range, and it has been for a while regardless of the snap elections. We'll see if that changes on the weekend. The French, remember, will be voting in their second round. The euro dollar at 107.84. The 10-year yield at 4.40 right now. Down by a few basis points as maybe investors think they should lock in these rates ahead of, I guess, way ahead of September rate cuts at the earliest. And then you see NYMEX crude at 82.95, holding steady right around the level we saw it yesterday. One of the stocks that we're watching closely at the open, that we have been watching closely for some time, is Paramount. It's higher now on reports that Skydance has reached a preliminary agreement to buy Sherry Redstone's National Amusements and merge it with Paramount. Bloomberg's Abigail Doolittle joins us now for more. Abby?
So the stock is higher. It's up 11%. That's just the best day in about 2 months, though, Matt, because I think that there's still a show-me sense here. So, yes, the news is that David Ellison's Skydance has reached a deal to buy National Amusements, which owns 77% of the voting shares of Paramount, $1.75 billion. Under the old deal, the expectation was that Paramount would essentially merge there. But one reason, at least our legal team here at Bloomberg is saying that the old merger did not happen is because Sherry Redstone is potentially at risk of being sued. Essentially, that if she were to get a bigger payday than everyone else, that she could possibly be sued by those shareholders and enter into litigation. So the question is, has anything changed now that would prevent that? Our legal team, their analysis at this time suggests not. But it's also interesting, Matt, because on the tape, we do have some headlines here. CNBC saying that the deal is expected to be completed by the weekend. And we also have CDS, an insurance on Paramount, coming in suggesting that investors think the deal is going to get done. But there is a little bit of an overhang. And as we speak, the stock is still higher, but at this point, well off the highs, up 8.6%.
Got it. Abigail Doolittle, thanks very much for that. Now, Tesla extending gains this morning after beating delivery estimates. Bloomberg's Simone Foxman joins us now with more.
Yeah, Matt, and shares set up for a 7th straight day of gains. We're looking at the highest numbers in the highest price levels since January and the best week since April if we finish out gains, finish out the week like we have seen. Multiple analysts raising their price targets on this name, both bulls and bears. From the bull side, we had Wedbush's Dan Ives writing that, quote, "The demand story has made a significant turn for the positive." On the back of these numbers, he's raised his price target to $300 per share, quite a premium to where we're trading right now. So is Bank of America. Deliveries notably better than expected. That price target $260, up from $220. Even on the sell side, folks like Guggenheim, where there is a sell rating, say that those delivery numbers were a materially positive surprise. They're maintaining their sell rating, but raising the price target to $134 a share. And most of those analysts bringing up the importance of that all-important robo-taxi event. We're going to get Tesla's details on this on August 8th, and that trading could be quite choppy until then, Matt.
All right, very interesting stuff. I think Abigail actually yesterday took a look at the technicals and said this was going to happen. So she should be taking a victory
That is
lap.
the 7th straight day of gains here.
Yeah. She said the stock looked set for gains from the technical perspective. All right, Simone, thanks very much for that. Constellation Brands higher after releasing its latest results this morning. Bloomberg's Jess Menton joins us now for more. Jess?
Well, Matt, looking into also the inflation story here, because people were worried when it came to its profit outlook, as well as sales that wouldn't keep up. But even though the results were a little bit mixed here, you still saw strong demand when it came to imported beer, particularly when it comes to Modelo. And that's really being driven by some of its younger customers that are pulling that out. If you look at its stock, though, it's kind of bouncing around, up still about 1%, coming off a little bit of session highs here. But if you look at the food and beverage industry group here in the S&P 500, still about flat. And if you look year to date, that group is also flat. But Bill Maloney, one of our squawk here at Bloomberg, is looking at the technical, since you just brought that up, Matt Miller. And specifically, he's looking at the uptrend that this stock's been in since March of 2023, and he's seeing double top resistance around 274 right now. If you look at this stock right now for Constellation Brands, it's actually trading around 261 here. The A&R function, though, if you want to look at where sell side is currently sitting, 23 buys on this stock, 4 holds, 0 sells. You have Citigroup here with a buy, also JP Morgan overweight here. But then you can't forget also when it comes to Constellation Brands here, and especially because if you're looking at particular beers, overtaking some of the sales growth that you would have seen in Bud Light last year. So you still are seeing that demand, even though you are seeing some of its other segments pull back a little bit here. You're still seeing consumers buying Modelo, Matt.
Are you a Bud Light drinker, or I mean, you're Texan, right?
I'm
So you
Texas,
must
so
drink
I
beer.
actually tend to do more of the Corona and the Modelo, to be honest.
That's what I was wondering about.
I do like it. South
Jess
Texas.
Menton, you know what? I think Katie Greifeld is going to talk to a maker of alcohol-free beer
Oh, okay, there we go.
in the next hour. So if you're ready to party on 4th of July, or not party,
ready.
but still want to drink beer, definitely stay tuned for that. Jess, thanks very much. Joining us now is Jim Caron, Cross Asset Solutions CIO at Morgan Stanley Investment Management. Jim, great to get you on the program. After we hit all-time, record highs again yesterday, is this going to continue into the second half? I mean, should we all have FOMO if we're not already in the market and just be pouring in?
Well, I think we are at a point where I think the upside is somewhat limited. It doesn't mean that we couldn't go up another 3% or so, or maybe 4%. It's just that I think a lot of the good news, or a lot of the surprises that that I guess that the market wasn't really expecting has really already occurred. And one of them, namely, is a significant increase in earnings, right? So at the start of this year, many people thought that earnings were going to be very weak, they were going to falter, and it turns out that we're on pace for like 11-12% earnings growth this year, and that's propelled the equity markets a lot higher. So where do we go from here? The issue that I have with this is that already, if we even start to look into 2025, what consensus expectations are for earnings would be around $277, $278, which would be about another 13% earnings growth from projected levels. If you even if you assign a multiple of somewhere around 19.7 or 20, which is around the consensus, that only gets you to about a 54.75 S&P 500. And as you were saying on the show, we're already through that. So how much further can we go? How much further can this overshoot take us? What we would need to see is a broadening of the rally, a cyclical recovery in some of the more lagging sectors to really start to participate.
I mean, first off, I want to give a shout out to Jess Menton and Bloomberg News' equities team, because they've been writing about this earnings expansion. 3 quarters in a row, I think, of expansion after 3 quarters of contraction. But, Jim, is that the S&P 500? Are all those companies growing earnings, or is it really the Magnificent Seven growing earnings and the rest of them still in recession?
Yeah, that's it exactly. I mean, if you look at the top 10 companies in the S&P 500, they account for probably about 38% of the overall earnings growth this year. I mean, disproportionate. If you look at the S&P 490, so X out those, say, top 10 companies, earnings growth is flat to slightly positive, right? So it's really just a very narrow sliver of the overall market that is actually driving these, that's driving these valuations. So even if we look at the correlations within the S&P 500 are very, very low, which means that when we think about the stock market, when we say the stock market, we're really talking about 7 or 10 stocks. We're not really talking about all 500 in the index. So this becomes somewhat concerning, because when we make an economic projection and we say, what is the health of the economy, the equity markets should reflect that in some ways, but we're actually not seeing that. So we need to be a little bit careful in terms of how we connect those two things.
I wonder, nobody ever wants to talk about the election because you don't want to get political, but last Thursday's debate showed us a really disappointing performance from President Biden, and that raises the chances that Trump will occupy the White House. If he does, Larry Summers has said his policies would be extraordinarily inflationary. And indeed, Goldman Sachs has just come out saying that if Trump wins and put those policies in place, that the Fed's going to have to raise rates 5 times. To me, that's a pretty shocking message from Jan Hatzius' team at Goldman Sachs. Do you have to start talking to your clients about the risk around the November election?
So I think what's interesting about this is that when you ask people the question, will the election be a volatility event for the markets, they say yes. When you ask them, what are you actually doing about it? They say not very much, because it's really hard to discern. If we take Trump's supposed policies at face value, which is tariffs and maybe potentially weakening the dollar and spending and all these various things at the headline level, that could be thought of as inflationary. But look, he's already been president. We know what he's done. A lot of times he comes out and he'll throw a very high headline number out there for tariffs, and he's willing to negotiate it back down. So to the extent that the market tries to anticipate what's the real number, what really actually happens versus what is he projecting and what is he saying, there's a huge gap in between those two things. So it's easy to make a projection and say, if I take this at face value, this could mean, the following inflationary outcomes, and this could be bad for the markets. But if we say, what is real? What are you really betting on, and what are you really pricing in? That's what I look to the markets. The market's a better voting machine than what many of the analysts are effectively saying. And what the market's saying is that it doesn't necessarily believe that. Look, if Trump is ahead in the polls as he is today, supposedly, as far as we know, the markets are already pricing this in. I don't think the markets see this. So I think there's a big difference between what the markets are voting on and maybe what Mr. Summers, who I, by the way, admire greatly, is actually saying.
Yep, it's a great point. There's a very big difference between what most politicians say on the campaign trail and then do once they get into office. Jim, thanks so much for joining us. Hope we can have you back soon. Jim Caron there of Morgan Stanley Investment Management. Coming up, one of F1's most wanted gets locked into a new multi-year deal. We'll speak to Pierre Gasly about Alpine F1, his new contract, and future prospects. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
As F1 drivers scramble to secure seats for next season, Pierre Gasly has locked up his spot at Alpine F1 in a multi-year deal. Now the question is, who will join his team after Esteban Ocon leaves in 2025, and which power plant will Gasly get when the rules change in 2026? Here with me now is GP winner Pierre Gasly, Alpine F1 driver. Pierre, great to have you on the program. Thanks so much for joining us. I want to first ask about the improvements you've made. Alpine had a very tough start to the season, but you and Ocon have been adding to the points in the last few races. What have you done that's different?
Well, thanks for having me, first of all. Yeah, it hasn't been the easiest start of the season. Lined up in Bahrain for the first race of the year on the last row, which was a big disappointment. But then after that, yeah, we just had to focus on the package we had, constant work, and the team has done an incredible work. We've been scoring points in the last 4 races. So yeah, we're having a good momentum, and hopefully we can keep that going in the coming races.
You've signed what's called a multi-year contract. You are basically a team leader for Alpine now. Can you give us any details? Because I seem to recall that you signed a multi-year contract last year as well. Is it, a year plus, or is it a multiple year contract?
Multiple from today onwards. Obviously, it's a constant, conversation. Lewis Hamilton this year kind of shocked a bit the market with his move to Ferrari early in January, and it kind of triggered the whole market to start conversations a lot earlier than we all had anticipated. So looking at the future, there is a massive regulation change in Formula One in 2026, and it was important for me to secure a strong position, a strong car, a team that will allow me to perform at the front, and a project I really believe in. It hasn't been the best start of the year, but the team really managed to show me a lot of positive signs. work at the factory, managed to get some new signings from top teams, Red Bull and Ferrari and Mercedes, and I think we have a strong package. So I really believe in the project. It's obviously very strong connection as a French to be representing the only French manufacturer in Formula One, and yeah, I'm very excited for the coming seasons with the team.
How would you feel about a Spanish teammate? As I said, you become, you know, a real leader in the sport and in the business as well. How would you feel about Carlos Sainz as a teammate?
I would love it. I'm not gonna lie. I want the fastest guy available on the market, and yeah, and it's no surprise that Carlos Sainz is the most competitive guy available out there. I think we got a strong team, a strong package. We've seen that we're able to develop. There is obviously still a long way to go because we all want to be fighting at the front for podium and win in Formula One, but I definitely believe we got the team and the technical staff to do so. And yeah, let's see what will happen, but yeah, I would definitely not mind.
You've also got Flavio Briatore, who is, you know, clearly a powerhouse in the sport, a champion in his own right, a multi-year champion. What have you seen him do at Alpine?
I saw Flavio, you know, for the first time in Barcelona. In the team, I obviously met him earlier, a couple of years ago, but yeah, properly in his Alpine role. He's extremely motivated, and you know, I definitely welcome anyone that wants to contribute positively to the team. And he's got huge experience, a lot of connections in the F1 world, and definitely want to see Alpine right at the top. So we're sharing the same ambition, the same targets, and yeah, I'm looking forward to work with him.
You think he's talking with Andretti? I mean, FIA has said if Andretti wants a spot on the grid, you know, they should think about buying Alpine. He's obviously a great negotiator as well, and as Americans, we care about Andretti. What's your take on that?
This won't happen. You know, Alpine's not for sale, and you know, Renault CEO Luca De Meo has said it number of times already. So I think Andretti's got a plan to come in F1, and you know, will be definitely great to see them getting a spot on the grid. But yeah, definitely the Alpine is not for sale, and the ambition is definitely to make it to the top of Formula One.
Do you have a preferred engine supplier if Renault doesn't make the power plant for the new rule change in 2026? It's been talked about a lot that you could become a customer. Would you like to buy a Mercedes motor, for example?
Well, my preferred option is the fastest engine available. You know, I want the strongest package possible to win races, and obviously the car is one element, the engine is another very important element. So yeah, just we'll always support the strongest package available.
All right, Pierre, great to get some time with you. Thanks so much for joining us. I know you're going to talk with Bloomberg's Jason Kelly about the business of sports and about the entrepreneurship that you've been doing. So we look forward to hearing more from you. Pierre Gasly there of Alpine F1 GP winner, and now signed on for multiple years to the team. Coming up, the market-moving events you need to be watching. That's next in our Trading Diary. This is Bloomberg.
Britain's next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Time now for the Trading Diary, what you need to be watching this shortened holiday week. A slew of eco data comes out at the top of the hour. At 2 p.m., we're going to get Fed Minutes. Mike McKee in Washington for that. Tomorrow, the markets are closed for the July 4th holiday, and the UK holds its general election. If anyone comes back to work on Friday, you have the jobs report to look forward to, and that's a rather important piece of economic data. On Monday, we launch Bloomberg Open Interest, 2 hours of single stock stories and the players who are shaping the trading narrative. My co-anchors, Katie Greifeld and Shanali Bassick, join me now with the preview. Pretty exciting. We've been doing a little rehearsal for this program that we're launching. Yeah, what's your take? I mean, what are you looking forward to?
Very exciting. I mean, we start off the show with Mike Wilson. Strong note on equities. We're going to be coming off a strong weekend of a lot of talking about what's happening in elections, right, between the U.S., France, and the UK. Katie, what are you looking at?
I'm excited to also talk to Mike Wilson. We're going to be speaking to Howard Marks as well. And playing to Matt's strengths, we have Stefan Winkelmann, of course, the Lambo CEO as well. And just broadly, you think about the concept of this show. Obviously, we talk about the macro all the time on Bloomberg Television, but the guiding light here is we're going to tell the macro through the micro. We're going to talk to the CEOs behind these big companies that we talk to all the time.
And maybe when we're done, maybe Matt can teach us how to drive stick shift.
You must know. You just got a new
I've
car, is
tried
it not
once.
stick shift?
I've tried once,
I
automatic only.
I get it. Listen, we're going to be talking about the company stories, talking to CEOs, talking to sell-side analysts, talking to fund managers all the time. And one of those analysts, market strategists that we will talk about is leaving JP Morgan.
Yeah, certainly it's a really big moment, right? Because Marko Kolanovic has been such a big voice in markets. He has been more bearish than others. He's had a lower price target than many on the street, most on the street, I believe all of them, at 4,200. Of course, now the chief equity strategist is stepping into his role here of chief market strategist.
Even though equity calls were the problem, right?
Yeah, you have to wonder how they might approach this differently with new leadership. Remember, Marco was also the co-head of research as well, and it looks like there will only be a sole head of research, maybe some positioning open for some new talent at the top.
This is Bloomberg.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was
it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. It's not really a hump day because, we have tomorrow off, so it gets a little confusing. Paul Sweeney, though, apparently is out of here after just 3 hours. Super slacker. But Tim Stenovic is in. Hey, Tim.
Hi, how are you?
I'm good. We've never actually done this together.
I know. I'm very excited about it. I'm going to do my best Paul Sweeney.
Okay.
Talk about the Jersey Shore.
Excellent.
As much as I can. I think, by the way, he has a 10:43 train to
that
the
guy.
Jersey Shore.
Yeah, he was
That's
already in his swim gear. That's probably true. I'm Alex Steele, Tim Stenovic. This is Bloomberg Intelligence Radio. We bring you all the top news in business and economics and finance through our lens of Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. Just breaking right now, you got ISM services falling to a 4-year low. We're going to get to that in just a moment. In the meantime, let's get to a business flash here with Charlie Pellet.
All right, thank you very much indeed. Just about the best level of the day on the Dow, the S&P, NASDAQ. As we head into a holiday break, we got the S&P up 7 right now, 55.16. Potentially could see a record in a holiday shortened session today for the S&P. Trading stops at 1 o'clock Wall Street time. Right now, we got the S&P up 0.1%. The Dow also up 0.1%, higher by 40 points. And NASDAQ up 14, also a record right now, up by about 0.1%. 10-year, 4.36%. The 2-year, 4.69%. Gold up 1.4% right now at $23.62 an ounce. West Texas Intermediate crude, $83.17 a barrel. WTI up by about 0.4%. Treasury market saw a drop in yields from most maturities as data showing further weakness in the labor market reinforced the case for the Fed to cut rates this year. As for the inflation outlook, Mark McCormick is global head of FX and EM strategy at Toronto Dominion.
At the end of the day, what's going to drive the Fed in the next 3 months to September is inflation. So if inflation's hot next week, or if it's hot in the next month, or if it's one hot inflation report could kill the entire narrative that they will cut this year.
Mark McCormick of Toronto Dominion. Again, the 10-year 4.36%, S&P up 7, up by 0.1%. Sources tell Bloomberg independent film and TV producer Skydance Media has reached a preliminary agreement to buy Sherry Redstone's National Amusements and merge with Paramount Global, the parent of CBS and MTV. Paramount shares, they are surging now by 9.5%. Again, recapping, stocks higher, S&P up 7 right now, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. Alex Steele here along with Tim Stenovic. You have very loud typing, by the way. Did you know this about yourself?
I'm going to blame Alex. That was Alex. No, I'm just kidding. That was me. I do know that about myself.
This is so interesting.
At many jobs prior, people have complained about my typing, in fact.
That is just an interesting quirk of Tim Stenovic that now I will just internalize for a while.
I will be softer on the keys.
No, you do you. This is just
tickling the ivory
fun
over here.
information. Okay, let's get to that ISM Services. As Charlie was just saying, you had yields dropping after ISM Services coming at a 4-year low. Steve Miller, ISM Services chair, joins us from Fort Worth, Texas. Hey, Steve, what is happening?
Hi, good morning, Alex. Yeah, it was a surprise for sure. We saw 3 of the sub indexes dropping from last month, and we think that's that's definitely what drove the overall rating down. The only the business activity, new orders, and employment were in contracting territory. The supplier deliveries stayed in expansion territory, but with a small drop.
How do you explain it? I mean, we get the numbers, we have the data in front of us. As you mentioned, it's a surprise, lowest in 4 years. How do you explain it?
Well, what we saw from, so 2 months ago, we saw a contraction reading. And then last month, we saw a bump up, hoping that was a return to growth. But what we saw was real estate rental and leasing returned to negative. Transportation and warehousing returned to negative. And we saw mining consistent negative, and information and wholesale trade also swapped from growth to contraction. So we saw a pretty significant shift from many companies in the growth mode to contraction.
So is this like bad news, like recessionary harbinger thing, or is this just a softening? Like what's the read ahead?
Yeah, one of the things that we saw in the numbers was a continuing commentary on costs being high, but we saw some backing off of the rate of increase. So we're hoping that this is a blip, and from the overall commentary, there was a bit of a mix in terms of positive of sustained business meeting plan. So it didn't seem like a shock from the overall commentary, but it certainly wasn't good news.
Yeah, that's what I'm trying to. Is it good news for the Fed though?
It kind of the down, up, down that we saw this month and the last 2 months certainly gives some credence to the Fed in saying, let's look at things for a little while, make sure that we're seeing that stabilization before rate cuts.
So just one more question then. The consumer, does this show that the consumer is slowing and buying less stuff?
Well, we saw retail trade for the second month in a row in contraction mode, and then wholesale trade went from expansion to contraction mode from last month to this month. So I would say yes.
All right, Steve, we're going to have to leave it there. Thanks so much for joining us. Steve Miller is ISM Services Chair. He joins us from Fort Worth, Texas. Once again, June U.S. ISM Services falling to 48.8, below all estimates. Taking a look at the markets I've been open for about 36 minutes. We're seeing green across the screen. The S&P 500 higher by a little more than 0.1%. I want to bring in Bloomberg equities reporter Alexandra Semenova to talk about the markets. But before we get to that, we got to talk about your big scoop this morning, because it was the scoop heard around the street. JP Morgan's Kalanovic to exit amid string of poor stock calls.
Yeah,
Congrats on the scoop. What can you tell us?
Thank you so much. It's so great to be on with you guys. So yeah, Marko Kolanovic, who was of course JP Morgan's top market strategist, really prominent voice on Wall Street, is leaving the firm. They say that he is pursuing other opportunities. He's been with JP Morgan for 19 years now. Dubravko Lakos-Buhas, who was chief equity strategist, is taking on the role of chief market strategist. So a little bit of firm-wide shakeup going on at JP Morgan, and right now specifically in that research arm. Hussein Malik, who is the co-head of global research with Marko, is now going to be the sole head of global research. So a lot of moves. And of course, this comes after a really tough stretch for Marko Kolanovic. You know, back in the day, he was known as Gandalf for making a series of prescient market calls. He was a star on Wall Street, but it's been a really tough run for him. He was bullish in 2022 as the S&P 500 sank. Last year, he stayed bearish, as the S&P surged 24%, and he's kind of stuck with that call, which again is not materializing.
Yeah, it was a great scoop. Congrats on that.
Thank you.
Just before we let you go, individual stock movers, right? Dell, what's going on with Dell?
Yeah, a bit of a quiet trading day today, but there are some names in focus. Dell is an interesting one. It was up in pre-market trading, but now it's kind of moving back and forth. This is after Bank of America added it to its U.S. #1 choice list. It's basically a collection of their best investment ideas. So typically that bodes well for a company when a major investment bank is flagging it as one of its preferred investment options. They did make some other moves on that list. They renewed Amazon Spot after 52 weeks on the list, and they removed a company called Amphenol. So they maintained the buy rating on it, but removed the company off of the list.
What else is on your agenda for today? What do you have your eye on?
So also taking a look at shares of Amazon after a report, the Jeff Bezos is going to unload 25 million additional shares of Amazon worth about $5 billion. This was the day that the company hit a fresh record. Of course, it passed the $2 trillion market cap last month. It's had a pretty good run along with the mega cap tech stocks. But Jeff Bezos, I guess, thought it was a good time to sell some stock.
So he has the new yacht. Is this all for Blue Origin? Is he going to just spend money on Blue Origin, the space race?
Must be.
Well, what do you spend money on when you have that much money?
Well, he's got the 2 houses in Florida, I think.
So the upkeep, maybe.
Yeah,
he's living his best life.
Yeah, he's redoing those.
Okay, well, that's fair. I mean, I'm sure there's some.
I think Blue Origin is a big part of. He said this years ago that he will continue to sell stock to support Blue Origin, but since then, he's taken on some other
Endeavors
you could say,
stuff. Yeah.
The house is all over.
Yeah.
And the new yacht.
It's upkeep. Alexander, thanks a lot. Alexander Semenova, really appreciate it. And thank you so much for that scoop as well. Nice work. All right, coming up, it is a holiday tomorrow, but there is a massive storm. It's a hurricane barreling through the Caribbean. We want to keep you updated on that with these life-threatening winds. Rob Carolyn is Bloomberg meteorologist standing by here. Hurricane Beryl, Rob, what can you tell us right now?
Well, it's less than 125 miles to the southeast of Kingston, Jamaica. The radar out of southern Cuba just now starting to show some of the winds and rain on the northeastern side of the storm affecting the far eastern portion of Jamaica. The good news for Jamaica is based upon the latest computer guidance and the satellite imagery, it looks like the core of Beryl may remain offshore south of Jamaica. So the highest winds that battered the eastern portion of the Caribbean earlier this week may remain out over the Caribbean Sea, which certainly would be good news for Jamaica. It's going to be a stormy day, and they're under a hurricane warning. But if the core of the storm remains offshore, that means the highest winds will remain south of the south coast of the island, and the damage would not be as severe as what we saw through the eastern Caribbean. It's now a Category 4 hurricane. The sustained winds are at 145 miles an hour. The good news is it's a quick mover. It's not going to stall. It's moving towards the west-northwest at 20 miles an hour. Jamaica under a hurricane warning today. There's also a hurricane warning in effect for all of the Cayman Islands. The eastern portion of the Yucatan Peninsula under a hurricane watch. We think the storm will be moving away from Jamaica tonight, passing south of the Cayman Islands early tomorrow morning, and then approaching the coast of the Yucatan early Friday morning. Now, after it crosses the Yucatan, it's going to weaken. It'll enter the southern Gulf of Mexico as a tropical storm, and then there's the potential for some redevelopment before the storm makes another landfall late Sunday night somewhere in extreme northeastern Mexico or near the Brownsville, Texas area.
Hey, Rob, before we let you go,
sure.
Just give us an idea of timing here, because this is so early in the year to be talking about a hurricane such as this.
It is, but the big story is the fact that the Atlantic and Caribbean are so warm, Tim. They're more temperature-wise what we would see in August or September rather than early July, and that's why we've seen this storm develop and get so intense so quickly and so early. There's a tropical wave behind this system that's going to bring some squally weather to the areas that were hit by Beryl earlier this week. So we're talking the Windward Islands. They'll probably see 1 to 3 inches of rain with this next tropical wave coming through, but conditions aren't as good. Beryl has weakened in the last 24 hours because of some winds blowing into it in the upper parts of the atmosphere from the west. We think that's going to continue, and the really good news is there's a big cloud of Saharan dust over the central Atlantic. That dry, dusty weather has the tendency to prevent the development of tropical systems. So once we get rid of Beryl, it looks like it may be quiet for about 2 weeks.
Bloomberg meteorologist Rob Carolyn with the latest on Hurricane Beryl. Rob, certainly appreciate it. Happy 4th to you and yours. Thanks so much for joining us. Well, taking a look at markets right now, stocks higher, bond yields falling. This after weak economic data reinforced the case for the Federal Reserve to cut rates. Let's get to what Ben Emmons has to think. He's founder and chief investment officer over at FedWatch Advisors. Ben, good to have you with us this afternoon. How did you take that weaker than expected ISM services data
Good news.
that we just got? Yeah, good news.
Good news, bad news.
Fed?
Like, I mean,
What's
you
going
know,
on?
bad news, good news, right? Is that what it was?
That's kind of how I took
Yeah.
it. Ben, how are you looking at it?
Yeah, the bad news is really good, right? It's like, you know, the yield curve gets a little flatter and stocks are lifted higher and the dollar's weaker, and it gives you this risk-on feel in the markets. Because if you really drill into that report, as you were talking to the main person from the ISM Institute, I noted too that there were a lot of comments about higher prices, somewhat still supply chain problems, freight rates rising. So there's a little bit like challenges there in terms of what's going on globally. So it leads to some softness and some more like what Powell basically was saying on the panel yesterday, that the risks are coming more and more in balance, right? The employment component was slightly weaker, so it was not really where the weakness was really in more like forward-looking indicators. So it just looks like more normalization. So I think this reaction, Alex, Tim, is about, you see the yield curve flatten a bit, parallel shift across the curve, all the yields are down about the same amount of basis points.
Mm-hmm.
The probability of a rate cut is not really changing much. Credit spreads are unchanged, but the equities are lifting higher. And so it clearly is not a number that reflects any kind of recession risk,
Mm-hmm.
rather more like normalization of activity.
So I guess the question becomes then, when does a slowdown become worrisome?
Yeah, I think, Alex, when you get more like persistent these type of weakness numbers, like if ISM services would really dip down to 40, I do think that you're getting a more bigger risk of a downturn. We don't know this yet, right? So far it's holding up, but it could be if this restrictive rate that the Fed has put in place, which now, by the way, is reaching closer to 3% in real terms, is going to affect activity more broadly. But it still feels like that each time we're getting a little bit like reprieve in rates, it just helps the economy. I just noted from the previous rally in bonds that, you know, financial conditions loosen, and again, it picks up in other data. I mean, the services PMI data that came before the ISM data was actually better. So I think it gives us still this mixed picture of financial conditions when they loosen. It actually helps the economy. Ironically, a rate cut does help the economy.
Okay, Ben, stepping back a little bit, thinking more about the macro politics here in the U.S. I know you were watching the debate on a Thursday. You sent a note out about it. How are you watching politics and what happens in November right now? What's your thinking in terms of who's going to be on the ballot come early November?
I find it interesting, Tim, that the market doesn't seem to be worried about if Biden were to drop out, right, so to speak, if that actually were to happen. Because I think that what the market is taking from it is no matter who comes in there then as the replacement, the fiscal policy that the Biden administration wants to put forward will remain the same. The same thing, on the other hand, if Trump does win, we know what he's going to do. He's very clear about it. But it's going to be net stimulus for the economy. So in that sense, I dubbed it as the risk on elections, right? As in, you know, whomever will be the candidate, there's going to be stimulus coming our way, which is why I'm not in the camp of any kind of recession risk in the near future. Now, who will ultimately be president? I think markets cannot really decipher this. It just comes down to the voters, we know, right? But I do think that markets are trying to make a probability calculation of the most likely outcome of what does it mean for policy and the economy. It seems that the so-called red sweep idea is really currently in the market. That sort of played out over the past week. But that could very quickly flip if the polls flip. So I think the market will keep playing with this red sweep, blue sweep idea until we head to the election. Either way, more stimulus comes our way, I think. That's what the market sends right.
Yeah, it just a matter of is it a bear steepener or a bull steepener in the bond market. All right, hey, Ben, we really appreciate it. Ben Emmons, founder and chief investment officer at FedWatch Advisors, and nice job on the new gig. Happy to have you here. I wonder how this sets us up with ISM services, though, into Jobs Friday. If you look at that employment number, you really 46.1. I just wonder what we're in for Jobs Friday.
Okay, what's the estimate that we have coming
we're at
right
190?
now? 190. 272 last month.
I mean, that would definitely be a slowdown.
That would be a slowdown. But remember, last month it was such a big surprise to the upside.
Yeah. All right, coming up, we have Geetha Ranganathan, Bloomberg Intelligence U.S. media analyst, to talk Paramount. Skydance bid apparently is real and back.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow lower, the S&P, NASDAQ both advancing. Potentially could see records in a holiday shortened session today. S&P right now at 55.16, up another 7, up 0.1%. The Dow, though, in the red, down 11. Little change there. NASDAQ up 27, a gain of 0.1%. 10-year at 4.34%, the 2-year 4.67%. Gold up $31 the ounce to $23.61, up 1.4%. And West Texas Intermediate crude up 0.4%, 83.12 for a barrel of WTI. Jeff Bezos has disclosed a plan to unload 25 million additional shares of Amazon worth $5 billion as the stock hit another record yesterday. Today, Amazon is retreating. Amazon right now down by 1.1%. Again, recapping, Dow Jones Industrial Average little changed, up 1 point. S&P up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. I'm Alex Steele alongside Tim Stenovic. Paul Sweeney is almost on his train to the Jersey Shore.
Is he going to listen to us on his way?
Obviously,
he better.
as he would. This is Bloomberg Intelligence Radio. We bring you all the top news and analysis through our great Bloomberg Intelligence analyst lens. They cover 2,000 companies in 130 industries worldwide. So, funny story. Yesterday, Tim and I do a simulcast together. I'm on TV, he's on radio, and we do a simulcast from at the closing bell. And we're talking about Paramount, and Tim says...
I say, well, more news in Paramount yesterday because there were a couple reports that there were some bidders circling. And I said, when is this story just going to die? When is this going to be done?
Yeah, and then literally like 2.5 seconds later, there was a headline that said Skydance and Paramount have been talking for a deal, and they agreed to the deal.
I thought Skydance was out.
So did we, and apparently now they have a preliminary agreement. So it's so confusing. Luckily, Geetha Ranganathan, Bloomberg Intelligence U.S. media analyst, can help us. Geetha, what is happening?
Yeah, thank you so much for having me, Alex and Tim. Yeah, it's not over until it's over, and we've seen this movie now play out so many times. But yeah, Skydance is back. It looks like they have amended some of the terms of the deal agreement with Paramount. Remember, they had been in this very, very long, drawn-out negotiating process. We're talking almost 6-7 months. And then right when they were at the finish line, somewhere in mid-June, Sherry Redstone basically just walked away, from the entire deal. But I think now they're back. And I think the one big thing that Sherry Redstone was kind of looking for, which she seems to have gotten, is slightly better in terms of the amount of cash that she's going to get paid. So I think previously it was about $1.7 billion. Now it's $1.75 billion. But I think more importantly is that she is getting stronger indemnification language in the deal agreement, which basically protects her from any potential lawsuits. That's something that she has been pretty worried about, because remember, the Skydance deal basically favors her over everybody else. So that is obviously breeding ground for a lot of litigation. And the one thing I think that is going to work for Skydance and David Ellison is that there is no longer this requirement for the majority of the minority shareholder approval, which was kind of a non-starter for David Ellison. So I think she has said that, okay, we don't need that anymore. So that's where we stand right now. We're really not sure about, if there are any deal sweeteners for the Class B shareholders or what else is happening in terms of the other deal terms.
Yeah, this is a very complicated deal. And it's also, given the dual class share structure, makes it even more complicated, Geetha. I'm wondering who gets what. Lay it out for us, because we know David Ellison, who's, we should note, is the son of Larry Ellison. He's a film producer. He's certainly interested in the studio business. But who gets what if this deal were to go through?
Yes, I think what is going to happen is, obviously, as you said, this is an extremely convoluted, complex process. So in stage one of this deal, it's a multi-step deal. In stage one, what is going to happen is Skydance is basically going to acquire National Amusements. Now, National Amusements is the parent company of Paramount.
Okay, I'm just getting out the whiteboard to make a diagram here.
Actually, that's a good idea.
Yeah. It holds about 80% of the voting stock for Paramount. So they're going to go ahead and do that transaction first, and then once that's in place, then Paramount is going to merge with Skydance, so it becomes one whole combined entity. And then obviously right now you have this really kind of funny structure at the Paramount. So they basically fired their previous CEO Bob Bakish, and now they have kind of this three-headed CEO. So they have three different division chiefs who are heading the company as kind of the stopgap arrangement. So I think the plan is, once David Ellison takes control, he's going to have Jeff Shell run the whole thing. And remember, Jeff Shell used to run NBC, so he's extremely familiar with the media business. So that is kind of the tentative plan. But again, we'll have to see. And I think the reason why Sherry Redstone prefers the Skydance plan to, let's say, the Sony Apollo plan, which actually gave better financial terms to the rest of the shareholders, was because they were really looking to sell a lot of the assets and only keep the studio. I think what Skydance has promised Sherry is that they will keep the company pretty much intact before they start looking to kind of dispose of assets. And I think that was very important for Sherry and kind of her preserving her family's legacy.
So one key point, though, was the majority of the minority of the voting shares won't have to vote on this deal. How are the majority of the minority voting shareholders going to feel about that?
Not good. And that's been the feeling all through, right? Because this was Sherry Redstone basically having her payday at the expense of everybody else. And so they have been threatening, Mario Gabelli especially has been extremely vocal about this. He has been threatening litigation. He said, don't go down this path with Skydance because I'm definitely going to sue you. Everybody else is going to sue you as well. So obviously they do not like this, which is why, Skydance was kind of putting in all of these different deal sweeteners for the Class B shareholders, even for the Class A shareholders. But again, I think Sherry Redstone, especially when, about 3 weeks ago when she said no, was again scared of all the litigation that was going to come her way. And I think the other thing that has happened, Alex, over the past few days is, the regulatory environment. I think there's a whole different perspective of what might happen in Washington right now. So I think initially we were kind of looking at a regulatory process that was going to be extremely difficult for these companies to cross the finish line. If you have a Trump administration, that whole climate definitely changes. It eases things up. It's pro-consolidation. So I think maybe these companies are looking at it from that perspective as well.
That's interesting. I mean, that's a big bet to make ahead of an election where a lot can still happen. I think many people would argue. Geeta, I don't have to tell you this, and I don't have to tell much of our audience this, but media is a tough business right now. And I'm wondering what makes these assets attractive to this buyer. We're in an environment where we're seeing traditional linear TV just completely fall apart. The movie business is being taken on by it's not even fair to call them upstarts, but the streamers. The legacy companies are trying to adapt to become streamers with very mixed success, I think it's fair to say. What are the attractive parts of Paramount's business?
Yeah, so definitely not the TV networks. One could argue that...
Okay, Survivor is still awesome, okay? Let's just put it out there. You know how I feel about this, Geeta.
Yeah. Well, CBS, I was going to say CBS is actually the one crown jewel in the whole Paramount TV portfolio. And obviously that has, Survivor, that has all of the NFL, all of the sports rights. It has a pretty robust news lineup. So, when it comes to sports and news, which CBS has, they're actually in a good place. It's the rest of the Paramount and the Viacom cable networks that are really not in such a good place, which is, Nickelodeon, Comedy Central, MTV, VH1, all of these other channels, which are general entertainment channels, which have basically been exposed to the most rapid kind of deterioration in terms of audiences. So obviously that part of the business, I'm not really sure who would really want. Maybe Warner Brothers Discovery, maybe they see that there's, there could potentially be some kind of synergies there. But again, Skydance, I know is not obviously very excited about that. The one asset that Skydance is definitely very excited about is the studio. And remember, they've had a long history with Paramount. I mean, they've financed so many of the movies, whether, it's Transformers or Mission Impossible. So they
do
know
the new Top Gun too?
Mm-hmm. Yeah,
okay.
The new Top Gun as well. So they have had a long history with Sherry Redstone, with the Paramount studio business. And remember, at the end of the day, content is king. And they know that. And, whether the Paramount Plus streaming service works or not, I mean, this content is still valuable, and they could sell it to Amazon. They could sell a lot of this content to Netflix. They're already doing some deals. But again, the content is definitely valuable, and there is definitely this arms race for content. So, I think they definitely want the content production piece of it. Again, you're absolutely right that the TV networks is going to be a little bit hard, but I think that's what Sherry Redstone also realizes, and she realizes that the longer this process kind of drags out, the less and less valuable those assets are going to be.
Do we think that Paramount stands a chance? Okay, let's just say this actually happens. What's your time frame? Let's give them a year, 6 months?
Yeah, so I think, you mean as a standalone company?
Yeah, until you say, okay, this deal is a success or the deal was not a success, yeah.
Oh, okay. So once the deal actually goes through,
Yeah.
I think, it would take at least about 12 to 18 months to kind of get the whole integration done and to kind of figure out what the path forward would be. So yeah, I think it would, and we're also kind of looking at this broader media landscape also, Alex, in terms of what could happen in terms of other deals, right? What is going to happen with Warner Brothers Discovery? What's going to happen with Peacock and NBC? And there probably is a whole wave of consolidation coming. It's just that the regulatory climate right now looks extremely difficult.
All right, Geetha, we really appreciate it. We appreciate you in all these circumstances. Geetha Ranganathan, Bloomberg Intelligence U.S. media analyst. Yeah, I don't know if Tim knows this about me. I'm a big Survivor
I didn't know that about
fan.
you.
Yeah,
No.
we got into it when I had a concussion in November, and then my family and I, we have like joint Survivor family night. We talk about it and we learn things. It's like a whole.
What season? It's like season in the 30s or
We
something?
bing bong.
Where is
No,
it right
46,
now?
baby, 46. We
I'm way
bing bong
behind.
all over. We're currently watching, I think, season 36. We kind of just go where we feel.
Okay.
And then, yeah, it's a guilty secret that I have that I apparently share with all of radio. Okay, coming up, we're going to talk to Ellen Hazen, Chief Market Strategist over at FL Putnam Investment Management. Her take on the markets right now. Michael Barr, World and National News. Michael?
Thank you very much, Alex, Tim, Charlie. President Joe Biden blamed travel plans that took him to France and Italy in the weeks ahead of his disastrous debate against Donald Trump. Biden has agreed to an exclusive interview with ABC News on Friday to address the fallout from his debate performance. Biden is defiant in the face of calls to step aside and allow the Democratic Party to select a new presidential candidate. Democratic Representative Mike Quigley of Illinois said he is concerned Biden could hurt not just his own reelection, but those of Democrats in Congress.
The best case scenario is the polls remain the same in states where he's behind. He's got to catch up. He's got to improve. And is he capable of meeting the rigors of that task?
Quigley spoke on ABC News Prime. Jamaica is preparing as Hurricane Beryl heads toward the island. The Prime Minister declaring the island a disaster area before the major Category 4 storm arrives. Airports are closed and residents are stocking up on food and fuel ahead of the storm. Bloomberg meteorologist Rob Carolyn has the latest on Beryl.
But if the core of the storm remains offshore, that means the highest winds will remain south of the south coast of the island, and the damage would not be as severe as what we saw through the eastern Caribbean.
Bloomberg meteorologist Rob Carolyn. Ukrainian President Volodymyr Zelensky is challenging former President Donald Trump to present his plan to bring a quick end to Russia's war with Ukraine. Zelensky sat for a nearly hour-long interview with Bloomberg Television in Kyiv.
To finish war fast. Tomorrow, do we want the war to be over tomorrow? We didn't the war even to start. It was Putin who started it. But I hope you agree that it will be fair. If Trump knows how to end this war, he should tell us today.
Zelensky spoke through an interpreter. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The total number of Americans collecting unemployment benefits is the highest in more than 2 years as job openings trend lower. Weekly jobless claims are also up, rising at 238,000, one of the highest levels of the year amid seasonal furloughs in the U.S. auto industry. Meantime, payroll processor ADP says businesses added 150,000 jobs in June, the fewest since January. The data set the stage for the government's monthly payroll report Friday. Vinny Dale, Judice, Bloomberg Radio.
Indeed, today's economic data reinforcing the case for the Fed to start cutting rates this year. S&P up 7 to 55.16, a gain of 0.1%. NASDAQ at a record up another 25, 18,054 right now, pushing higher by 0.1%. The Dow lower, little change, down 18 now, a drop there of just under 0.1%. 10-year yield 4.35%, the 2-year 4.68%. Spot gold up $32 the ounce, up 1.4%, 23.62. And West Texas Intermediate crude up 0.2%, 83.02 for a barrel of WTI. Dell Technologies has been added to Bank of America's U.S. One List, a collection of the firm's best investment ideas drawn from buy-rated U.S.-listed stocks. Dell shares, they're advancing now by 0.7%. Recapping, we're looking at a mixed day in the U.S. market. Holiday shortened session. Stocks and trading at 1 o'clock. S&P up 6 right now, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. I'm Alex Steele alongside Tim Stenovic. Paul Sweeney is just getting on New Jersey Transit right now, just in case you're keeping watch.
That's a really optimistic view of New Jersey Transit.
I guess that's true. Well, technically it's 10:43, so he's one more minute to make everything go bad.
So we'll see if it actually happens.
I'm sure he'll be writing in.
If the trains are running on time.
Exactly. This is Bloomberg Intelligence Radio. We bring you all the top news in business, finance, and economics through our lens of our Bloomberg Intelligence crew. They cover 2,000 companies, 130 industries worldwide. We also tap the outside of Bloomberg Intelligence to get a take on the market and the broad views. Ellen Hazen is Chief Market Strategist of FL Putnam Investment Management, and she joins us from Massachusetts. Broad question first, Ellen. Is the bad news good news, which is what we saw today in the stock market and the ISM services, and for how long does that last?
Thanks, Alex, and thanks for having me on here. There's no question that the S&P has already appreciated quite a lot this year. So while in the very short term, we may see bad news be good news, I don't think that that's likely to last going forward. It's going to be difficult for the S&P to outperform dramatically from here, given that it's already up over 15% year to date. And it is true that the market has been primed for bad news. And so when it gets bad news, it's not so bad and it's okay. But if the market is expecting today's PMI numbers to change the Fed's trajectory in terms of rate cuts, I think that's premature. I think that's unlikely to happen, at least over the next few months.
Well, and the question, I guess, the next question is, when does the bad news actually become bad news?
The key thing here to watch is corporate earnings, really, because at the end of the day, that's what drives equity markets and indirectly also drives fixed income markets. And as long as equity earnings and corporate earnings are okay going forward, then the market will be okay. But if we begin to see growth roll over, especially in the Magnificent Seven, but also in the broader market, then it really is going to become bad news equals bad news. Let me tell you why. If we look at corporate earnings rolling over, it means that consequently jobs are going to start rolling over. It means corporate confidence is going to start rolling over. It means that capital expenditures are going to start rolling over. So corporate earnings are really the underpinning for a lot of the metrics that you and we watch day to day, week to week. And if the corporate earnings begin to slow down, then I think the market will take a step back and say, whoa, okay, what does this really mean? Should we be concerned? But as long as corporate earnings are strong, which they look like they are at the moment, then any good news, bad news dynamic is really going to be limited to very short-term impacts.
So to that point, I'm just curious, does it, though, prevent the broadening out? So, okay, ISM services, like we can sustain it. It's a little bit weaker, et cetera. Maybe it's not a full-on slowdown yet, but does it prevent like the small caps from rallying? Anything but big tech, basically.
The ISM numbers both eased, right? Manufacturing and services have come off a little bit. They're not bad, but they are getting a little bit worse. And so I would like to see that broaden out more and improve a little bit, because you're exactly right, Alex. in order for small companies to do well, we need services to do well. And we need a broadening out of corporate profitability, a broadening out of increases in sales, increases in profits. So in order for the market to broaden out, we need to see earnings broadening out. If you look, though, at the Magnificent Seven earnings compared to the rest of the market earnings, the forecasts right now are that it's going to broaden out. So I think that the services and the manufacturing ISMs, while both moderating from better levels last month, don't necessarily mean that it's all going to fall off a cliff. Instead, I think that smaller companies should continue to do okay if the earnings estimates are correct.
I just want to jump in some breaking news crossing the Bloomberg terminal right now. This, according to the New York Times, President Biden told an ally he is weighing whether to withdraw. Katie Rogers at the New York Times reporting, quote, that President Biden has told a key ally that he knows he may not be able to salvage his candidacy if he cannot convince the public in the coming days that he's up for the job after a disastrous debate performance last week. Once again, this coming from the New York Times.
Yeah, they had a great in-depth piece. I don't know if you saw it this morning. Yeah, it really captivated the attention on sort of conversations with aides and people in the administration and his cabinet, and a really wide, diverse view of his health.
So it brings up a good point, Ellen, for you to weigh in on this, and sort of how you're watching what's happening when it comes to the presidential election and how we could see that affect markets.
It's a very interesting question, and I think the market has been assuming that Trump is going to win and that Biden is not going to pull out. Because if you looked at both the way the equity and the bond markets have reacted, and also if you look at the polls, Trump pulled ahead in virtually every measure since last week. And so the market didn't really believe, and the polls didn't really believe that Biden was going to pull out. So this is really new news, and it will be very interesting to see how things respond to that. There is, on the one hand, a lot of optimism among Democrats that if you bring in a lot of fresh, young blood, new faces, new voices, new ideas, that could really shake things up and energize the race. The technical complications of actually changing the delegates and the convention notwithstanding. But a lot will depend on what their policies are. Yeah. And that's a complete unknown at this point. Both Trump and Biden had historically been running on a platform of higher deficits, and that's part of the reason that yields have risen in recent days. But if you had a Democratic candidate who looks as though it could shake up the Trump dominance at the moment, and that candidate had a more restrained fiscal stance, then you might see a change in the bond market there.
Yeah, it's gonna be interesting, and it's so hard to wind up betting either for or against, or how you manage it. Like, clearly hedging doesn't always work with this. Before we let you go, because you got to make stock picks no matter who's in the White House. What's your top pick right now?
Top pick right now is a company called Vertiv. It's a spin out from Emerson Electric from a few years ago. They concentrate in data center HVAC, so heating, cooling, and so forth. And you can imagine how much that has been growing recently. If you look at the earnings estimates, they've just been going up and up and up for the last 3 years as data center growth has exploded. The company is looking at strong double-digit top-line growth and 25-30% earnings growth. So that's a stock that we think is going to do well in almost any presidential environment.
Already up 91% so far this year. Still room to run?
Not bad.
It is. We've missed the easy money at this point, anyone who isn't already in it, but the future looks very strong, and I expect estimates to continue to increase.
All right, thanks a lot, Ellen. We appreciate it. Thanks for hopping on July 3rd. Ellen Hazen, Chief Market Strategist, FL Putnam Investment Management, joining us in Massachusetts. Again, that headline that we just crossed from the New York Times, President Biden apparently has told an ally he is weighing whether to continue running, according to the New York Times. He has the interview with George Stephanopoulos on Sunday, July 7th. So it does seem like, I wonder how much weight will be put on that or not. And then you got NATO.
Yeah, this person who spoke to Katie Rogers of the New York Times said to her, quote, he knows if he has 2 more events like that, we're in a different place by the end of the weekend. And she was, or he or she was referring to the president's halting and unfocused performance in the debate.
Yeah, you just wonder then what the conversations are behind the scenes, because you can't just sort of withdraw and no other option, like who that would be, etc. Yeah, we
what
also
happens at a convention, or is the candidate picked by them?
Yeah, it's going to be interesting. We're going to cover that within the next hour. Gregory Corti will be joining us, as well as Jordan Fabian. They cover politics in the White House for Bloomberg News. We're going to break all of this down for you. This is Bloomberg.
your company news headlines on Bloomberg Radio.
Bloomberg World Headquarters, I'm Charlie Pellet. Paramount Global shares are jumping the most in 2 months after a merger deal with independent film and TV producer Skydance Media was revived. Sources say Skydance, led by Oracle co-founder Larry Ellison's son David Ellison, has reached a preliminary agreement to buy Shari Redstone's National Amusements and merge with Paramount, the parent of CBS and MTV. Paramount shares, they're up now by 7.8%. Alaska Air's unionized flight attendants are in line to get an average pay increase of 32% as part of a new record contract with the U.S. carrier. The Association of Flight Attendants Alaska disclosed further details of its tentative 3-year agreement, which among a slew of improved changes to remuneration and conditions includes around 21 months of retroactive pay. A deal could have broader implications for larger rivals American Airlines and United Airlines Holdings as unions seek similar bumper increases. Shares of Alaska Airlines today, ALK on the ticker. Right now we have got Alaska shares trading higher by 0.5%. Among some of the other carriers, American up 1.3% and United right now up by about 1.8%. Southwest Airlines, meanwhile, has adopted a shareholder rights plan to defend against a push for a leadership overhaul and other changes by activist investment firm Elliott Investment Management. Southwest shares, they're advancing now by about 0.6%. U.S. stocks trading mixed. Coming up, top of the hour, we'll recap the markets. S&P up 8 right now, up 0.2%. Those are some of our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. It's hump day, but it's also kind of Friday, but it's also kind of Wednesday. It's a little complicated. This is Bloomberg Intelligence Radio. We bring you all the top analysts with our great Bloomberg team here at the Bloomberg Interactive Broker Studio right here in Midtown Manhattan. I'm Alex Steele alongside Tim Stenovic. We also keep you updated on world and national news, and for that, we go to Michael Barr. Michael?
Alex, Tim, Charlie, thank you very much. Illinois Governor J.B. Pritzker urged President Joe Biden to address the nation to explain his strategy after his disastrous debate performance to his allies against former President Donald Trump. Meanwhile, Democratic Representative Marie Gluesenkamp of Washington State says she is now convinced that Biden cannot beat Trump in November.
Biden is going to lose to Trump. I know that's difficult, but I think the damage has been done by that debate.
Gluesenkamp spoke to Portland, Oregon's KATU television. It's one day left of campaigning in the UK before tomorrow's general election. The latest Bloomberg poll shows that Keir Starmer's Labour Party is 20 points ahead of Prime Minister Rishi Sunak and the Conservatives. Bloomberg's Lizzie Burden has more on the most likely outcome according to the bookmakers.
An unprecedented Labour majority of 250 plus seats. Now, this was barely conceivable 5 years ago after the last general election, when you'll remember Jeremy Corbyn led Labour to pretty much annihilation versus Boris Johnson's Conservatives. But the polls suggest that this sort of supermajority is what we are going to have.
Bloomberg's Lizzie Burden in London. Jamaica is preparing as Hurricane Beryl heads toward the island. The Prime Minister declaring the island a disaster area before the major fork storm arrives. Airports are closed and residents are stocking up on food and fuel ahead of the storm. Bloomberg meteorologist Rob Carolyn has the latest.
It's now a Category 4 hurricane. The sustained winds are at 145 miles an hour. The good news is it's a quick mover. It's not going to stall. It's moving towards the west-northwest at 20 miles an hour. Jamaica under a hurricane warning today. There's also a hurricane warning in effect for all of the Cayman Islands. The eastern portion of the Yucatan Peninsula under a hurricane watch. We think the storm will be moving away from Jamaica tonight, passing south of the Cayman Islands early tomorrow morning, and then approaching the coast of the Yucatan early Friday morning.
Bloomberg meteorologist Rob Carolyn speaking to Alex and Tim within the hour. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Tim, Charlie.
Thank you so much, Michael Barr. Also, we really appreciate your shirt.
It's a great shirt.
Yeah, for those on radio, it is a black button down, but it has like white flowers.
It's like Is it a Hawaiian shirt?
It is a Hawaiian shirt.
Okay, there you go.
And let this be a lesson to everybody.
Okay.
Make sure that your dry cleaner is open the day before because I went there and it's like, oh, you're closed. I didn't know you were closed. So I said, you know what? Since it's the holiday, I'm gonna wear my shirt. It looks great.
And it's appropriate for our next conversation because apparently nowadays, if you want to go on a beach vacay, you're not going to the Caribbean, you're going to Scandinavia.
It's too hot. It's too hot in the Caribbean. It's too hot in Europe.
They're called coolcations, apparently. Scandinavia also has, like, extreme weather like everywhere else, but apparently it's about 18 degrees Fahrenheit cooler than Southern Europe, and the cool breeze is more typical than the choking humidity familiar with the South.
I had a great vacation to Norway about 8 years ago. My wife and I went before kids, and we went from Bergen to Oslo, and it was in August. We were also in Sweden, actually, at that time. It was glorious, and I will say there were parts of the trip that were very cold, especially in Norway. I mean, we're talking like jackets and stuff. Middle of the summer.
And apparently they're all having a moment. So Scandinavia has a 27% rise in bookings compared to last summer. Sweden, 47% bump. Meanwhile, Italy is up only 3%. And apparently flight searches from the UK airports to Copenhagen, Bergen, Norway, and Stockholm for this summer are up almost double-digit percentages.
Okay, one thing to keep in mind, if you are going to go to Stockholm during August, everything's closed. Everyone's on vacation.
Okay, but can you wear the Hawaiian shirt in Stockholm?
Well, I'm going to Detroit and I'm going to wear this
Hawaiian
shirt. It's like, yeah, go Tigers. Come on now. See me?
Sports. Yes, I see you. All right. Thanks very much. There you go. Coolcations. All right, coming up, we're going to talk about this breaking headline from the New York Times that President Biden is considering and talking to allies about stepping down.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday, everybody. Happy July 3rd. I'm Alex Steele alongside Tim Stenovic. Paul Sweeney is on his train to the Jersey Shore. This is Bloomberg Intelligence Radio. We bring you all the top news and analysis with our great team of Bloomberg analysts. They cover 2,000 companies, 130 industries worldwide. Just an update here. So this is what's happened in the last half hour. The New York Times had a piece out saying that President Biden reportedly told an ally that he's weighing whether to continue running. That we just had a headline coming out that the White House spokesperson has now denied that Biden has been considering dropping out. We're going to try and understand what all of this means later on in the hour. We have Bloomberg White House and political reporter Jordan Fabian and Bloomberg White House and politics reporter Gregory Corti will be joining us. We're also going to take a check-in on Hurricane Beryl with Rob Carolyn in just a moment, and Sylvia Jablonski will tell us all about what she thinks about this crazy market that we are in. But first, let's get you a business flash, and here with that is Charlie Pollard.
Thank you very much indeed. Lots of moving parts. Let's begin with the numbers and the story behind the numbers. S&P right now up 10 to 55.19, a gain of 0.2%. We've got the Dow down 82 now, down 0.2%. NASDAQ up 64, higher by 0.4%. 10-year 4.34%, the 2-year 4.68%. Gold up $32 the ounce now to $23.61, up by about 1.4%. And West Texas Intermediate crude up 0.1%, little changed, 82.87 a barrel on WTI. Traders sending stocks higher, bond yields falling as a string of weaker than estimated economic data reinforces the case for the Fed to start cutting rates this year. As for the market backdrop, Ellen Hazen is chief market strategist at lead portfolio manager at Putnam Securities, and she was a guest right here on Bloomberg Intelligence.
And it is true that the market has been primed for bad news. And so when it gets bad news, it's not so bad and it's okay. But if the market is expecting today's PMI numbers to change the Fed's trajectory in terms of rate cuts, I think that's premature. I think that's unlikely to happen, at least over the next few months.
Ellen Hazen of Putnam interviewed right here on Bloomberg Intelligence. Jeff Bezos has disclosed a plan to unload 25 million additional shares of Amazon worth $5 billion as the stock climbs to new records. Today, we do have shares of Amazon down 1.5%. Recapping S&P up 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. I'm Alex Steele, alongside Tim Stenovic. We thought it was going to be a slow day, didn't we?
We did, but that's what happens. It's like walking into an emergency room and saying, hey, it's not very crowded in here.
And then, you're waiting in the waiting room for 75 hours. On the economic side, we have the politics side, which we'll be getting to. On the economic side, ISM Services did disappoint. It was a bad news, good news for the overall equity market. At least that's what it seems. The S&P up 0.1%. Bond yields also still dropping. There are individual movers, though, that we definitely want to keep our eye on here. And for that, Norma Linda joins us. What is on your docket?
Well, I'm looking at a few names here this morning. Let's take a look at Paramount. So I know we spoke about this yesterday.
Must we?
Do we? I was going to say, do we? Nora, I know I'm just the guest here, but do we have
Must
to?
we? Must
do we
we,
have
right?
to?
I mean, we have to hit on it for the listeners.
Yeah, all right.
All right, we'll do it.
We'll do it. We'll do it. Alex and I are just, we've been doing this story for better
all day,
part of a
every
year
day.
at this
It feels
point.
like it's something new. But looking at this here, we are seeing shares pairing their advance, but they were earlier up as much as 13%. That's the most in 2 months, and this is coming after a merger deal with Skydance Media was revived. And of course, we know this is just a day after we heard chatter that Barry Diller of IAC was considering making a bid for the company. I mean, if you think about Paul, and I know, Alex, your thoughts on this, and clearly you as well, Tim, it seems as though everyone's wondering, why are investors still sitting here in this stock? But there's lots of action, nonetheless, to keep track of here. And we do have that preliminary agreement to buy National Amusements and merge with Paramount, according to a person familiar here.
Okay, Paramount, certainly one of the stocks on your radar. Maybe people are starting to think about celebrating the 4th of July weekend a little early, maybe picking up a Modelo or a Corona. The reason I'm talking about that is because Constellation Brands is on your radar.
I heard the gag.
I know,
Yeah,
I just don't like those beers. Like,
Yeah.
if I'm going to spend the calories on a beer, I want, like, a craft-made, yummy beer, like,
Sounds like you live in Brooklyn.
It does. Oh my God,
Yeah.
Very
so
on
true.
brand.
Sounds like you see exactly.
Very
Sounds like
on
you
brand.
live in
We could have
Stockbrook.
carpooled in this morning, Alex.
It's probably entirely accurate. All right. Anyway,
Well, it does seem that people are enjoying beer. So we are watching Constellation Brands, as you mentioned, the maker of a lot of alcohol brands. And here we did see shares rising as much as 2%. They're now churning lower. This is after its beer results topped expectations, despite recent signs of deceleration in the industry's scanner data. So, I mean, we're right here in time for the 4th of July coming in tomorrow, and it seems that that is clearly the drink of choice.
and Tesla. It's been a really good week for Tesla. Is it going to be a good Wednesday for Tesla?
It's so interesting because I feel like there's been so much doom and gloom associated with this company, especially we do know that Elon Musk is such a big name. It's almost like people flock behind him like, I don't know,
Or run
Messiah.
away from him.
Or run away from
it's
him.
either one.
Right, but we do have a really positive week this week. We were seeing shares of Tesla up as much as 7% today and trading today, hitting their highest intraday level since January. So quite the pop here. We had Wedbush saying that the demand story has made a significant turn for the positive. And of course, we all know that this is coming after that better than feared delivery data. It did still see a decline, but not as bad as the market expected. Guggenheim, who actually has a sell rating on the stock, said that its better than feared delivery figures were a materially positive surprise, and especially coming into that report, his expectations were that there would be some upside risk to those numbers. So positivity here for Tesla.
So that's a 7th day in a row that Tesla's higher.
7th day.
Highest since going back to January. We had an
Exactly.
interesting conversation with Doug Krisner yesterday about this, and he said, he always reminds me to look at the other side of the trade. And he said, there could also be some short covering happening when it comes to what's going on with Tesla.
Definitely.
What else are you watching? It's going to be a weird week. We do have jobs on Friday, right? So there's still the data dump that we're going to see. There's the uncertainty on the elections. We don't get earnings really kicking off till, the 12th, right? That's when banks go. So what else is on your radar?
I mean, I think most of the attention right now is going to be on that jobs print that we are getting tomorrow. But one thing to note today is that even though the stock market is closing at 1 p.m., we're actually going to get those Fed minutes at 2 p.m. coming in this afternoon. So it'll be really interesting to parse what the Fed was thinking, especially coming out of that last meeting as we look forward, especially with people really changing their expectations on what the rate cut outlook or the outlook for rates in general could be this year.
Okay, so we got that happening later today. We got jobs coming on Friday. right now, numbers looking to be significantly lower than we saw last month, but that was a big upside surprise. How are you watching that eco data?
I mean, I think that we had quite a few things come in today. Of course, I always like to hop back to real estate. So we did have that U.S. mortgage rates data coming in today, and we did see a decline in applications for refinancing homes as well as just applying for mortgages in general, with mortgage rates now up above 7% once again. So I'm watching that. And then, of course, on the jobs front, we did have that initial jobless claims report come in this morning. 9th straight week, longest stretch since 2019 that we have seen initial jobless claims rise. So lots of things to parse and analyze as we're going through this week, and especially topping it off on Friday with the jobs report.
All right. Thanks so much, Nora. We really appreciate it. Nora Melinda joining us on all the market movers that you need to know. See, we're working. I totally forgot about the Fed minutes, even though we're doing that in 2 hours.
Did you have the same? I took the subway in this morning, Alex, and it was empty, completely empty.
Yeah.
It ran perfectly.
Yeah, of course.
That's how you know it's empty. And then I get to the office here, thinking that the office is going to be empty. Absolutely packed. Is our office the only one working? I mean,
yeah, we
here.
are. We are
Everybody is
hardcore
here today.
workers. Exactly right.
It's crazy.
That's what we're doing here at Bloomberg, radio, TV, and media.
Right, and I thought it would be quiet as well, and especially when you think about that Marco. I don't know if you saw the story. My colleague Alex, amazing scoop, but just seeing him departing from the firm after 19 years. Lots to look at there. I'm sure that's going to be the conversation over the holiday when we think about people hanging out in the Hamptons.
That's a great point. We won't be there, but they will be.
I won't be in the Hamptons.
All right, Nora, thanks a lot. We really appreciate it. The other main event of today is Hurricane Beryl barreling its way through the Caribbean. Bloomberg meteorologist Rob Carolyn is joining us. All right, Rob, where are we here in the storm?
Well, we've got it about 75 miles to the southeast of Kingston, Jamaica. They're now starting to be affected by some of the outer circulation from Beryl. It's affecting the eastern tip of Jamaica, and conditions across the island are going to deteriorate over the next 6 to 12 hours from east to west as Beryl's core passes just south of Jamaica. Jamaica, the Cayman Islands, and now the eastern Yucatan, all under a hurricane warning. We're expecting some sustained winds, especially over southern Jamaica, in excess of 100 miles an hour. They'll be gusting easily over 125 miles an hour. 6 to 12 inches of rain likely across Jamaica, especially over the higher terrain in the central part of the island. It looks like the worst weather is the southern half of Jamaica, particularly the south coast. The northern part of the island being further away from the track with the core staying offshore will probably not see as bad a condition develop as they will in the southern part of the island, but it's certainly going to be a stormy day. They have to be very concerned about flash flooding in Jamaica, also the potential for mudslides and landslides, because the central part of Jamaica has some pretty significant mountains, and they are going to be causing quite a bit of rainfall to occur with this system. It's still got top winds sustained at 145 miles an hour, which means it's still a Category 4 hurricane. Its hurricane force winds extend 45 miles out from the center of circulation. Tropical storm force winds are out 185 miles from the center of circulation. Forward speed is slowed a little bit to now 18 miles an hour off towards the west-northwest, and the central pressure is now at 954 millibars. At this time yesterday, it was 938 millibars. So the system has weakened. We can see that on the satellite photos. You can't see the eye anymore. It's been covered by the central dense overcast, and the storm now starting to become a little bit more elongated and elliptical as winds from the west and the upper parts of the atmosphere start to shear the storm.
So, Rob, what ends up happening at the end of the weekend and into Monday when it comes to the path close to Texas, Corpus Christi, perhaps?
It looks like it's going to emerge off the coast of the western Yucatan Friday evening, probably as a tropical storm because it'll be inland over the Yucatan for a while. There is some potential for redevelopment on Sunday over the warm waters of the southwestern Gulf of Mexico. And then somewhere in northeastern Mexico, Brownsville, Texas, they have the highest chance of seeing a landfall early in the morning on Monday. But Corpus Christi is not out of that zone of uncertainty or the cone of uncertainty. So folks along the south and southeastern Texas coast should be paying attention to where Beryl is headed over the weekend.
Really great stuff. We appreciate it. Thank you very much for helping break us all down for us. We were watching that storm, any potential impacts very carefully. Okay, to the news of the morning. The New York Times had a report out that said that President Biden told an ally that he's weighing whether or not to continue running. Briefly after that, White House spokesman Andrew Bates wrote in a post on X, that claim is absolutely false. If the New York Times had provided us with more than 7 minutes to comment, we would have told them so. And this is ahead of President Biden speaking with George Stephanopoulos of ABC on July 7th on Sunday. We want to get more on all of this with Bloomberg News White House and political reporter Jordan Fabian and Bloomberg White House and political correspondent Gregory Cordy standing by, both joining us in Washington, D.C. You both cover the White House. Jordan, let's just start with you. What are you hearing from your White House sourcing on the tumultuous nature of this race at the moment?
Inside the building, the staff are, I think, looking for reassurances. There have been some all-staff calls signaling from the senior levels, from the president on down, that he's planning to continue on. That is all the public indications he's given. The White House press secretary yesterday laid out swing state travel, the interview that you just mentioned. So no public indications that he is preparing to step down at this point. But, among Democrats, there is a sense that if Biden can't right the ship in the next few days or perhaps the next week, then some serious discussions are going to be had about a possible replacement for the president.
Okay, speaking of that possible replacement, Gregory Cordy, I want to bring you in here because I'm wondering what the polling data tells us and who that possible replacement could be. What are the polls that we've seen inside and outside of our organization thus far that show how other Democrats could stack up against President Trump come November, former President Trump?
Speculative at this point because Joe Biden is the only Democrat who is running for president. But if you look at some of the alternate possibilities, obviously you'd have to go first to Vice President Kamala Harris. When we last did a Bloomberg News Morning Consult poll of swing states, Harris underperformed Biden by about 3 percentage points across the 7 swing states in our poll. Now, she has been, though, rising in her in the esteem that she has, particularly among Democrats, over the past few months, as people sort of come to terms with the fact that at some point, be it in 2024, certainly in 2028, there's going to be a post-Biden Democratic Party. Harris does very well there. Other candidates are talked about, California Governor Gavin Newsom, Michigan Governor Gretchen Whitmer, Wes Moore, the governor of Maryland. There are a number of other candidates, all of whom suffer from much lower name recognition than either Biden or Harris. I'd throw Transportation Secretary Pete Buttigieg in there. He's sort of an interesting wild card because he's in this administration. He probably is not in a position to challenge Biden directly. And in fact, most of these candidates would depend on Biden stepping aside before you could even talk about them waging any kind of a campaign for the nomination at the convention next month.
So, Gregory, when it feels like the pressure is on soon to be able to demonstrate to the public that he is fit for office and alert and the debate was just one bad night, what would constitute a victory for President Biden in the next week or so?
Yeah, you would have to think that it's going to be very difficult to get voters to forget what happened last Thursday. But yeah, he needs a couple of energetic performances. We saw one from him last Friday in North Carolina where he held a campaign rally. Look, that's a different kind of event than in a debate. Biden has not done a lot of sit-down interviews. He's scheduled to do one on Friday with George Stephanopoulos from ABC News. That will give us a sense of how he does in a more give-and-take environment. And then he'll have a couple of swing state rallies over the weekend. He needs some strong performances there, and I think that's what all of the Democratic Party is looking for, including people inside the White House, inside the campaign. Can he show that he can bring it? Can he bring that same energy that he brought to North Carolina on a consistent basis to maybe try to tamp down some of these concerns?
Well, Jordan, that's exactly where I want to go with you, because you have a great view inside the White House, inside the campaign. Increasingly, we are hearing calls, both anonymous and actually people attaching their names to them, that the president should step aside. But I'm wondering about the case that he should not step aside. What is the case to be made that the current president is the best suited for Democrats at the top of the ticket?
Well, some of the claims that I've heard is that it would be incredibly disruptive to replace the sitting president. It has never happened this late in the cycle. I mean, you have to go back to 1968 when Lyndon Johnson stood aside. He did that much earlier in the process. It was still the primaries, and the primaries are now over. And so the disruption is the first part. And there's still some people who believe that Joe Biden, out of all the other alternative Democratic candidates, is still best suited to run against Trump. Now, the polls that have come out since the debate sort of belie that. Kamala Harris is running ahead of Biden. Some other governors are running ahead of Biden. And the problem with the Biden campaign now is that they're kind of stuck in this death spiral with one negative story after another, and their initial response to these concerns was very slow, off the mark. And also, their decision to go after Democrats who are questioning Joe Biden as disloyal as bedwetters has only made the campaign seem more out of touch and demoralizing the people who they need to elect Joe Biden. So while they're making this case that he's still the number one person to take on Donald Trump, fewer and fewer people, even within his party, are believing that.
So to pair on to the New York Times, they had a piece out today, an in-depth piece on basically Biden saying he's tired, that he was tired, he didn't get a lot of sleep, he's been crisscrossing the country in the world in ways that even his junior staff are super tired, and he's doing it, etc. I mean, Jordan, that's also the job. So how do we make a case that President Biden is tired, which is legit? I would be tired too, but that's still the job. How does the administration or how does the White House need to walk that line?
Yeah, that's exactly right. I would point out that, while that schedule that he had was grueling, and I was actually on part of that trip with him in France, and by the end of that leg, I was tired, but he had 6 days to rest and recover between a trip to his beach house in Rehoboth and then the debate prep sessions at Camp David. So for a lot of people, that just doesn't ring true, and it gets again to the point that they keep coming up with these anodyne excuses for how Biden performed instead of acknowledging the reality that he's an 81-year-old man who has definitely lost a step, and the longer they continue to deny that reality, the harder it's going to get for them to persuade the public that he's still the guy for the job.
Hey, Gregory, I want to bring you back in here and talk more polling. We've seen some polling in recent days come out and show that Kamala Harris is neck and neck, at least with President Biden, in terms of how she's performing against Trump on a national level. But as I see those polls, I believe that one's from CNN, by the way. As we see those polls, I think to myself, it kind of doesn't matter national polling about a candidate in an environment or in an electorate where we use the Electoral College. So talk to us a little bit about the intricacies here of polling potential replacements for President Biden in an environment where national polls really don't matter.
Yeah, this is the whole rationale behind our Bloomberg News Morning Consult poll, where we look at 7 specific swing states. We're looking at Arizona, Georgia, Nevada, North Carolina, Pennsylvania, Michigan, Wisconsin, and those are the states that really decided the election in 2020. Biden won 6 out of those 7. Those are probably the states that are in play now. One of the problems is, at least according to some leaked Democratic polling that we saw over the past 24 hours, is that Biden's poor performance is dragging him down, not just in those 7 states, but in states that should be safe Democratic wins. We're looking at the possibility that states like Minnesota, Virginia, New Hampshire, which everyone at the beginning of this had in the Democratic column, now are up for grabs. And so that's a completely different map that gives the Republican, Donald Trump, a much bigger roadmap to a nomination, and it makes it all the more difficult for Joe Biden to thread the needle. The base case, the best case for Biden before all this was he wins those blue wall states, those northern industrial states of Pennsylvania, Michigan, Wisconsin. He finds some random electoral vote somewhere else, and he gets to 270, which is the magic number. If he can't win those 3 states, all 3 of those states, then it's really hard to see his path to the nomination. So does the question I think you're asking is, does Kamala Harris at the top of the ticket or some other Democrat at the top of the ticket help Democrats with that? Well, certainly, the one name that we've mentioned before is Gretchen Whitmer. She's the governor of Michigan. Maybe she helps in Michigan. Maybe she helps in a lot of those other states. Kamala Harris, demographically, does she do better with some of those swing states? We'll have to see. Again, it's very early. We're still sort of trying to wrap our heads around what a post-Biden Democratic Party will look like, and even how soon that's going to come, because the ball really is in his court. It's his decision whether he's going to continue to pursue this nomination.
Yeah, and it seems increasingly like there are more and more folks. And also the data that you just mentioned are showing that if there are states that previously weren't swing states that are now up for grabs as a result of what voters have seen in just a week, then that certainly is concerning, I would imagine, for Democrats. Jordan, I want to get your thoughts on just what you've seen, because you've been traveling with the president. You've been embedded with the Biden administration. What are you seeing, and how is it different from what you saw a few years ago when it comes to the president?
It's a good question. He, I would say compared to 2020, he's definitely slower. You can notice, more frequent, pauses. He's speaking lower. It can be really hard to understand him in a crowded room, or if he's not, hooked up to like the most powerful microphone in the world. And so, even, in private moments, if people are saying that he's been alert, he's been on it, and we've seen that in some public moments too, like the State of the Union address and his rally last Friday in Raleigh, North Carolina. It's mixed in with these moments that really, make him seem like older, like his age, like every one of his 81 years. And so, look, Father Time is undefeated. A lot of people acknowledge that, but the president and his team don't necessarily seem to be one of them.
Yeah, I have parents who were 80 and 81. Like, gotta take naps. You get tired. Like, this is the law of life. That's what makes it so interesting and it's sort of impossible to kind of manage. I wonder what this sets us up for NATO, guys. Gregory, we get NATO coming, leaders are coming to Biden. What's that going to look like, maybe in comparison to the G7 that we saw?
Yeah, I think events like the G7, like the NATO summit, are events that Joe Biden likes. He's always found a comfort zone in foreign policy. He likes talking to world leaders. It sort of reinforces this image of him as the statesman president. I hesitate to use the term elder statesman president, but that's sort of the role that he plays in international relations, not just by virtue of being the leader of the free world, by president of the United States, but he's been on the world stage for decades as president, as vice president, and in the Senate as service on the Foreign Relations Committee. So these are events where he will be in his comfort zone. But again, these are events where they're very tightly choreographed. There's not the opportunities all the time to kind of really see him engaging with a back and forth. And so, will the NATO summit give voters any kind of a visual confirmation of his continued ability to do the job? I don't know that it's the right venue for that.
Jordan, we spent this entire time talking about President Biden, but he's running against former President Trump. How has, and it's been quite a week for the former president with what many would argue was a huge victory from the decision from the Supreme Court on presidential immunity on Monday. How has former President Trump capitalized on the chaos that has ensued in the Biden camp this week?
He's done it by staying out of the way. You haven't really seen him in public too much. He's been up at his golf club in New Jersey, just kind of staying out of the spotlight and letting Democrats flounder, which it's maybe uncharacteristic for Donald Trump, someone who really craves the spotlight. And in the past, we've seen him step on others' misfortunes by committing some of his own mistakes in the public spotlight. But so far, he's stayed pretty quiet. The only format we've really seen him in is his social media account, where he was posting reactions to that Supreme Court decision on immunity. But yeah, he's kind of like let Democrats do the circular firing squad while he sits on the sidelines and just watches.
Mm-hmm. Jordan, what are you going to be looking for when President Biden sits down with George Stephanopoulos on Sunday? Like, what are you going to see that's going to be like, yes, that was good, that will read well, and what are the danger moments? Because that's the whole point, right? That he's not going to be on prompter. He's not going to be in front of a crowd.
Yeah, I think that's the first thing. It's just delivery and how he sounds. The most damaging thing I think about that debate performance was that voters already had this perception of Biden as too old, and that just cemented that perception in people's minds. And so it's very hard to unring that bell. It's very hard to reverse that. And so, I think people are also looking for some honesty from President Biden about his age and whether he can continue on, and what's a persuasive answer on that. I don't really know what a persuasive answer is, but I think voters and the public are looking for something a little more stronger, a little more persuasive than what's already come out of their mouths.
Hey, Gregory, I don't want you to give away everything and how you're thinking about polling moving forward with our partnership with Morning Consult and Bloomberg News, but I'm wondering how the events over the last 6 days have changed the way you're thinking about polling moving forward.
Well, yeah, absolutely. I think, as we've talked about it, we're going to have to start looking at are there alternatives for the Democrats. They have a very short window, though, to decide this. The convention is next month, but Democrats are talking about holding a virtual roll call as early as July 21st. So within the next 3 weeks to sort of cement Biden's nomination. So if something's going to happen, it's going to happen very soon. We're going to have to understand who these other candidates are, their positives, their negatives, what voters have seen, read, or heard about them. That's one of the nice things I like about our poll is that we ask an open-ended question. What have you heard about these candidates lately? And it gives us sort of a different kind of window. It's sort of free-form word association almost with when they hear names. What do they associate with those? The problem is we are in July. The election is 4 months away, and voters don't really necessarily have time to get to know some of these other Democratic candidates. Joe Biden has been the presumptive nominee since March. He's been the president for almost 4 years, and he's been in American life for 50 years. I mean, that's one of the things about this campaign is Trump and Biden are arguably the two best-known candidates ever to run for president. These guys have been celebrities or politicians for decades and decades. Voters have cemented perceptions of them, and it's really, I was thinking about this just a few moments ago. When was the last time we had in American politics a true outsider, somebody who was an unknown? And I kind of go back to Bill Clinton as governor of Arkansas, since we've had somebody who really sort of emerged out of nowhere. But of course he had an entire primary cycle to introduce himself to the American people. And I just think we have the time to really understand who these other candidates are, but we will be polling them, and we will let you know what we find out.
Gregory, we know you have to hop, so go ahead. Gregory Cordy, thanks so much for joining us, White House and political correspondent. Jordan, you are still sticking with us. When you talk to aides and people in the White House, just how nervous is everybody, or how calm is everybody? I just want to get a sense of the feeling there.
There's some uncertainty for sure. Everyone saw it with their own two eyes what happened on Thursday, and so there's been a lot of all staff, all hands calls between the White House and the campaign with senior leadership to try and reassure everyone. And look, I think you have it's representative of the Democratic Party. You have some people who are fully on board with Joe Biden, are believe the sort of spin that everyone criticizing Joe Biden is a bedwetter who doesn't know what's best for them, and then you have some people who are genuinely concerned and want some guidance. And so the senior staff have quite a bit of work to do to get the staff on side and make sure everyone's swimming in the same direction.
Jordan, one part of the conversation that I'm not necessarily hearing people talk about is the argument that the current president, whether or not he has 4 more years in him. And a lot of the conversation has been, can he handle the campaign running against Trump? If he wins, he's got 4 more years of traveling across the Atlantic several times in a short period. And is that a conversation that you're seeing happen, Jordan?
I mean, certainly within the public realm, it's just an obvious one. That this is one of the most demanding jobs in the world, if not the most demanding jobs in the world. And, we've seen, if it's true that, if you believe what Biden said at the fundraiser, that his poor debate performance was because he was very tired from this European jaunt. I mean, that doesn't bode well for 4 more years. So, they have to grapple with that.
Well, listen, this has been really helpful. Thank you so much for jumping on with us, Jordan Fabian. He's White House and political reporter for Bloomberg News. Again, the news of the morning has really been the headline from the New York Times that Biden has reportedly told an ally that he's weighing whether to continue in the race. The White House was very quick on X to deny that, saying that he has not been considering dropping out. But this obviously food for thought as we get into that George Stephanopoulos interview on Sunday, which I do think is going to be quite telling and sort of it feels like a potential breaking point on that.
Yeah, I mean, I think the pressure's certainly on the current president to prove that it was an anomaly, what the public saw last Thursday night at the debate, and the microscope is going to be there with every public appearance that he has.
All right, well, listen, I'm going because I'm going to TV for 12, but you're staying.
You're going to need a nap after this.
Oh my God, I am going to need a nap. I need a nap all the time,
you're in the same
though.
time zone.
So we're in the same time zone.
Okay.
All right, so Tim's staying. You got Tim. I'm going to TV. You can like have us on 2 screens. And for now, we're going to world and national news with Michael Barr, who will also be here and staying with you. Michael?
Thank you very much, Alex, Tim, Charlie. Let's get more now about President Joe Biden. He blamed travel plans that took him to France and Italy in the weeks ahead of his disastrous debate against Donald Trump for his poor performance on stage. Biden is seeking to explain in a moment as he looks to calm a revolt in his own party. The president will speak with ABC Friday about the debate fallout. However, Democratic Representative Marie Gluesenkamp of Washington said she's now convinced that Biden is going to lose to Trump in November.
About 50 million Americans tuned in and watched that debate. I was one of them for about 5 very painful minutes. And we all saw what we saw.
Representative Gluesenkamp spoke to KATU-TV of Portland, Oregon. Ukrainian President Volodymyr Zelensky said Donald Trump should come forward with his plan to quickly end